All right. Good morning, everybody. How are you guys doing? I stole this little comment from the traders chat room, and I thought it was pretty cool. Good morning, Joel, Steve, GWC, and Luciano. For those of you that are owners, if you spend any time over in traders chat, you saw a pretty good discussion going on yesterday. Good morning, Adriana. Nice to see you in this room. There's a great discussion going on between somebody who everybody looks to and says, "Oh my gosh, she's so good at what she does. I can't believe she's taking these trades. I can't believe she's taking these wins." Guys, if you're an owner, go to the traders chat and look at the conversation. Good morning, Mike. But I love this little quote from the discussion, and it says, "Look, I came no trading experience, and I didn't know who stuff. Went to class, I listened, and in the evening I watched the videos and I practiced and practiced. It's hard work that made me good at taking this. There is no shortcut." Guys, that is the most true statement in the world. There are no shortcuts to being good at what you do. Um, there's only practice. There's only hard work. There's only making it done. Hey, good morning, Luciano. And anybody that's done this for any amount of time understands that completely. But what's the easiest way to get to where you want to be, right? What's the easiest way to win more than you lose? What's the easiest way to reach your goals? Guys, you have to have a plan. You have to have a reason to get into the market, and you have to have a reason that you're getting out of the market. And that's it. You just have to have a reason. The market doesn't really care if you want to be in a trade or not. The market's not worried about how much you want to make. If your profit target is at 40 ticks and the market's only given 30, the market's only given 30. Awesome, Luciano. And I got to tell you, that's humbling for me to have someone with your experience to come in and still learn something in this room. I feel like there's something to learn every day. I feel like that I get better every day, not only from talking about it, but from doing it, from living it every day, from making the same mistakes that you guys make all the time. So I guess what I'm trying to say is in the beginning, guys, don't put the pressure on yourself to be good on day one. I firmly believe, and I'll stand behind it 100%, this is the greatest software ever. This is your golden goose, but we tend to, as humans, fry that goose rather than just embrace the golden eggs. So we're going to go through and we're going to do what we do every day. And we're going to talk about giving you a path, giving you a plan, setting you on the road to being exactly where you want to be. And it starts with advantages. Guys, everything starts with advantages. And the first advantage that I give myself each and every day is I come to forexfactory.com and I say to myself, where's the news? Today is Thursday, February 15th. Hope everybody had a great Valentine's Day. Guys, I hope you spoiled your ladies. Ladies, I hope you were spoiled by your fellas. But at 8:30 a.m., we had high impact news. And it can or cannot move the market. We never know what's going to happen. But the reality is anytime you see high impact, anytime you see medium impact, we have another one coming up at 9:15, there can be an emotional response. There can be some guy with a pocket full of money that says, egads and little fishes, I need to make this market go down. I need to make this market go up. I need to get it to my goal ASAFP. And guys, we don't want to be caught in their little emotional response. So just go in and check news every day. Know when it's happening. Set a timer, right? If you're trading at 115, FOMC member Waller speaks, and who knows what they're going to say. I have no idea. But it may be impactful, and it may make somebody have a knee-jerk reaction. So every morning I'm looking, guys. Every morning I'm just checking. I want to see exactly what's going on and where it's going on and all that good stuff. And then everything that I talk about is right here in the tutorial section, right off the education page, guys. I've said it a million times, and I'm never going to stray from it. There are no secrets with what we do. There are no secrets. There are no secret handshakes. There is no let me give them a little and sell them some more. I'm going to give you everything that you need to be successful, guys. And this is my favorite picture in the last year. What do we do at Nexgen, guys? We wait for momentum and we buy or sell a pullback. That's it. Let's get momentum. and then let's buy or sell a pullback. And what we're going to do this morning is we're going to identify momentum, and we're going to identify where the pullback is most likely to happen. So I don't know that we can put it any more simple than let's embrace momentum and buy or sell a pullback. When everything is going up, buy support. When everything is going down, sell resistance. And I know that that's an oversimplification, but I'm going to teach you how to do it, and I'm going to teach you how to keep it focused. And your world should revolve around speaking and advantages. Your world is about chart reads, not trading, guys. And the easiest way to learn how to read charts is to focus on this one trade, this high probability trade that we're going to talk about for the first hour. Guys, this is a trade where each indicator on every chart agrees for the trade. This is a trade that creates confidence through the memory of success. And this is the trade where it's not at all about looking for the trade, but it's rather all about looking for just 3 advantages on your charts. Looking for the advantage of momentum first and foremost, because we use momentum and then buy or sell a pullback. And then once you understand momentum, and momentum is like the creator of trades, then we're going to make sure that there's nothing in the way. And rule number 2 is going to make sure that you're not trading into areas that may stop the market. And I'm going to show you exactly how to identify them. And then I'm going to show you where that pullback is most likely to happen, guys. And it's 3 advantages that come from 3 rules. We're going to focus on simplicity. And these 3 rules are going to happen on only 2 charts. We're going to use a big chart and a small chart. How's that for technical? The big chart leads the way. The big chart will define the direction of the market. The big chart will define the momentum of the market. And the big chart will define the areas that we need to look out for. Guys, this is a broad stroke of a brush. It's a very slow-moving chart in comparison to your entry chart. It uses the most current bar to give you all this information. Your first 2 rules, providing 66.6% of your advantages, happen on the large chart. If the large chart doesn't say go, then it's not time to go. But when it does, when you have momentum, when you have a clear path, we're going to find out where to buy or sell that pullback. We're going to use it with rule number 3. And we're going to use it on a smaller, faster chart. And this chart is going to refine. It's going to take that one bar, turn it into 15, 30 bars, and that's where you're going to find your entries, guys. And that's going to create your lowest risk, and that's going to create your highest profit potential. And we use that because the large crowd is in control. The large crowd is going to tell you whether it's going up or down, because that's what the large crowd wants. They've got the power and the money to move the market. The large crowd is going to give you that coveted momentum, that best of the best advantage. And it's also going to show you where the people in charge may be making decisions, and that's going to be the areas on the chart. So direction, momentum, and areas are all defined over here. These guys tell you exactly what's going on. And then we're going to use the small chart because it's a small crowd. It's these dudes hanging out in the parking lot, and they love to fight. These are leather jacket, cigarette smoking hooligans. And when the large chart says up, these guys are like, let's buck the system. And they're going to fight. Guys, we love these guys because they give you that little push to where you and I are going to buy or sell support or resistance. So it's really only 2 charts. Remember that you're not in charge, and it's easier to go with the flow. And the reason that I focus on this trade, guys, and this is the biggest reason that I teach the high probability trend trade first, that I want you to start speaking to yourself in terms of advantages, because when you understand the high probability trend trade, when you can understand the looks associated with these 3 rules, you become a chart reader. And guys, everything is about the read. It's not about the trade. 90% of your day is spent reading indicators. 90% of your day is waiting for advantages. 90% of your day is doing not a darn thing because there's not a darn thing to do. And it's that patience that pays dividends. Because when you wait for the 3 advantages, you find yourself in a trade that typically wins 70 to 80% of the time. You find a trade that brings you confidence through the memory of success. And you find a trade that really gives you the absolute best of the best. And when you're reading your charts, when you become a chart reader, when you're good at this high probability trend trade, you're going to understand where the market is likely to continue. This is your pullback point. This is where we're going to enter the market looking to go with the trend, looking to go with the momentum, looking to not trade into areas. You're going to understand where the market is likely to go based on the momentum in the market. You're going to use, once again, momentum. It's going to rear its ugly head here. And you're gonna recognize that push, and you're gonna see areas, and you're gonna understand the market has got an amazing chance to get to that area. That's where my profits are going to be taken. And then finally, you're going to understand where the market is likely to stop. Guys, if we rely on momentum and a pullback, we want to make sure that we haven't gone head first into something that may stop or reverse the market. And those are those likely to stops. We call them termination conditions here in class. So becoming a chart reader will set the tone for everything you do. Becoming a chart reader is what gets you into the correct trades. It's what keeps you out of the wrong trades. And becoming a chart reader is really a three-step process. It's the process of understanding momentum through strong trigger lines. It's understanding termination conditions and when they're not present through the areas where the large crowd reacts. And then it's finally just dialing it into an entry, using a limit order to buy or sell a pullback on a smaller, faster chart to get you in with the advantages produced on the large chart. So guys, we're going to talk about these. Your job is to simulate, to practice, to take pictures. The more pictures you take, and Rob S., were you able to get that good picture now from yesterday's lesson? Guys, I want you taking pictures of everything. I want you taking pictures when you see momentum, even if there's not trade rules met. I want you taking pictures of termination conditions, even when there's not trade rules met. I want you taking pictures of entries, even if there's not trade rules met. So Rob, we need to figure out how to get you into that mode because it's going to make your life easier. Did you practice? Did you try? What were your challenges so that I can squash them and make life better for you? That's my goal. We're going to do that today. So guys, you have to learn the rules. You have to be able to understand when it's okay to trade, when you have momentum and a clear path in that entry area. You guys just simulate, practice. Break some eggs, right? Get out there, make some mistakes. It's okay. Rob left the building. The idea is that every time you take a trade, we want you having those advantages because those advantages create a statistical advantage when you get into the market. Those advantages create trades that win more than they lose. Those advantages are the reason you're getting into a trade. So every time you post in the room, guys, tell me why you did what you did. Tell me where your brain was. Let me know what you were thinking. And I use this to give you the best feedback ever. If you tell me, man, everything was green, so I was looking for a short trade, well, then I know that you don't understand direction. Man, everything said up, and since I had hit these red lines, I wanted to make sure that I took a trade into them. Well, that lets me know that you don't understand termination conditions. But if you say, Mark, everything was going up, and I patiently waited for a pullback to support, and then I used that momentum to get up to that next area, well, then we're going to pop confetti, and we're going to say, hell yeah, that's exactly what you're looking for. Show me where you got in on that small chart. Maybe we can do it a little bit better. Tell me why you got out here instead of hoping that that broke. Maybe we can find more money for you. Or maybe we can keep you from giving back too terribly much, guys. So the more you post in the room and the more feedback that you put on that chart, the more you give me to work with, the better I'm going to be able to serve you. The better I'm going to be able to talk about your chart reads, to focus on your entries, to talk about your exits, to help you create management plans. And guys, that's my goal. 15 hours every week. I'm dedicated just to helping you guys get to where you want to be. We're going to simplify heavily. We're going to focus on becoming chart readers. We're going to do it with the high probability trend trade. I'm also going to talk to you about a medium probability trade. And I'm going to pull out my little slide tool here, guys. This is the favorite thing I've ever built. If a trade is three advantages, right? A trade is nothing more than momentum, a clear path, and an entry area in that order. If I remove one of those elements from the equation, guys, if I look at my chart and suddenly I don't have a clear path, my ability to read charts is going to assure me that I still have momentum, and my ability to read charts is going to insist that I have the best entry area. And when you remove one element from the equation, well, now you have what's called a medium probability trade. And a medium probability trade does not win typically 70 to 80% of the time. A medium probability trade isn't a hold on for dear life, make them come get my stop scenario. A medium probability trade means that there's an issue, and the issue is that one of your advantages are gone. I'm going to give you a plan that revolves around the omission of a clear path, that allows you to still get the most out of a market that hasn't really cleared a problem area. So we're going to focus on the high probability trend trade first. We're going to become chart readers. And then I'm going to introduce you to a medium probability trade that's going to keep you a little busy and keep your brain working. But guys, you've got to commit to a look. You've got to know what it is that you're looking for. And the easiest way to do that is to go back and look at the market when it isn't moving. Everyone's like, man, I can't find these trades. Good morning, Kep. I can't find these trades, Mark. The market's moving too fast. Well, I'm going to tell you right now, guys, if you go back and you study and you look at the market when it's not moving and you identify the components and the entries and you look at 50, 100, 200, 300 pictures, well, then you're setting yourself up for understanding how to catch it in the moment. This is exactly what it looks like when things are right. This is exactly what your entry looks like when things are right. So you commit this look to memory, and through practice and simulation, you'll get to the point to where you catch it live. But if you try to circumvent posting in class, if you try to circumvent filling up your spreadsheet with hundreds of pictures, guys, you're going to struggle. You're going to spin your wheels, and you're going to find yourself not where you want to be for longer than you want to not be there. So post your trades in class, guys. That's the first step. It's always been the first step. Open yourself up to feedback. I'm pretty warm and fuzzy. I'm not very abusive when it comes to feedback. I try to keep your feelings in mind, but I'll also be very honest with you because it doesn't do me any good to tell you, man, you're such a great trader when you're really not. If you're getting lucky, I'm going to tell you that you're getting lucky, guys, and luck runs out when you go live. The next thing is use your spreadsheet. So who did this last night? Who looked at what they did yesterday, or who did it this morning? Who studied and said, man, this worked. Trading with momentum worked. And who said, what didn't work? And maybe the answer was trading in determination conditions. Didn't work. And what felt easy? Guys, rules-based trades feel easy. They really do. Ron, you did it? I did it. What felt forced? What made you nervous? Guys, and if you do this every morning, you're going to see patterns. You're going to see patterns in the market that are bringing you success. You're going to see patterns in yourself that are robbing you of that success. And if you're honest with yourself, everybody got to go with the mo. I like that, Gino. We're going to use that one. Got to go with the mo. But what you're going to notice, and Gino may have just said it from his study, is when that momentum went away, it was harder to win, right? When that momentum wasn't strong, the market didn't tend to push in the direction. And it's cool because you're going to see this over time. So guys, use this tool. It's such an important tool. Every morning, go back and study what you did yesterday. Every morning, ask yourself these simple questions. Every morning you do that, it's going to prepare you for the day because now you have a plan for success, right? Guys, I had a day last week where I got the ever-loving crap stomped out of me because I abandoned my rules 100%. My last 25 days of trading, 23 days of trading, I've won 22 of those days. I've had one losing day in the last month, essentially. That one losing day, I deviated so far from my plan that I blew out an account. And I'm not proud of that, but I did it, and it happens, and it's a part. But you got to go back and you say, what the hell happened? Well, I broke my rules. I traded my ego rather than my rules. And man, my ego kicked my butt. So guys, do this every day. It's going to make life easy on you. The spreadsheet that Nexgen gave you has your trading log right here. What kind of trade? How did you feel? What were the conditions? And then what was the feedback from class? Let me make sure that I can move forward and be a little better today. The second tab allows you to create your trading plan. Ron, I'm going to put you on a pedestal for a second. Ron loves his momentum trades, but Ron said, man, I keep seeing a pattern. I keep seeing a pattern that seems to work more often than it doesn't. Let me start snapping pictures of it. And guys, I was very fortunate to be a part of the process to see him building this trade, and it was fun to watch. But he filled up probably a spreadsheet with 100 pictures of this pattern before he ever committed money to it. And he made sure that it won more than it lost. And he did that in the personal trade setups. When the pattern was right, when the rules were met, you start flooding this with that look, whether it's a high probability trend trade or a medium probability trend trade, and you're committing those looks to memory, and they become easy in the moment to catch them. And then finally on the third page, guys, this is where I've done a little bit of work for you. I have given you the sequence for buying that pullback, long or short. We've got 300 pictures of you guys killing it with the software, taking advantage of momentum, of a clear path of entry areas. There is a section dedicated to NASDAQ. And I know that I've got some people that are dying to trade the NASDAQ because they know John Novak does it. They know that other people do it. Guys, if you don't understand your chart reading, the NASDAQ is going to chew you up and spit you out. If you can't make decisions in a fraction of a second, the NASDAQ is going to kick your butt. There's some nuance to it. But when you get to that chart reading stage, guys, there's my thoughts on it, the things that help me trade it. There's ideas on management, keeping it pragmatic for the new user. There's the patterns that repeat themselves. And there's a whole section dedicated to having a clear path. So, guys, this spreadsheet is an outstanding tool, and it's a very underutilized tool. If you go through the repetition, it creates recognition. So I want everybody in the room to commit to 15 pictures a day. Okay? 15 pictures, that's all I'm asking for. I typically have 15 pictures before I open up this classroom. Because by the end of the month, you're 300 pictures deep, guys. And in 90 days of study, you're just around $1,000. And what happens is you start seeing the value in taking these pictures, and you remind yourself this is what it looks like. This is what momentum looks like. Let me take 50 pictures of momentum today. Let me scroll back on my charts and just take pictures of momentum. This is what termination conditions look like. Let me go back and let me find termination conditions and commit them to memory. And guys, I promise you, you will get out of the software what you put into the software. The work you put into it will be rewarded 1,000 times over. I see it all the time. And then thank you for that, Ron. My pain in the butt feedback telling Ron that he was giving me heartburn. It helps though, right? Because Ron is showing me trades, guys, and it was amazing. And I want to show you how the feedback works. We'll use the trade from this morning. Everything is up and I have momentum, guys, and there's this beautiful pullback, right? And what happens for the new user is the first thing, is the first thing that you have to do is you have to recognize the first advantage, and that's momentum. And if you don't take pictures, this look doesn't become easy. And you have to make sure that you have a clear path. And if you don't take pictures, this isn't easy. And then if you don't have an entry and you don't take pictures, it isn't easy. And guys, this is pretty cool because what happens is you present this picture and maybe your entry is up here, right? Or maybe you had a limit order waiting down here, or maybe you traded right into a red line. And what we can do is we can take what you've done and we can talk about every advantage. We'll talk about the momentum on your chart. We'll talk about the clear path on your chart. We'll talk about the entry area on your chart. And then you'll incorporate these three concepts into a trade. And it doesn't have to be a high probability trend trade. It can be whatever trade it is. And that's what Ron did. Ron noticed that he kept having momentum and a clear path, and he created his own entry area. It was pretty outstanding. And it's so outstanding that I've actually incorporated his trades into my plan a little bit. I've started doing a little bit about what Ron does. And let's see, just to make him proud, let me see if I can find the one that I took yesterday that was very much a Ron trade. Hell, I don't know. Was it that one? No, that was yesterday morning. I don't know. There was one that I took yesterday that was so much a Ron trade. That's from class, but it looks like that. So I'm thankful for you guys as much as I hope to make you thankful for me. All right, I'm rambling a lot. We're 30 minutes into it. Guys, what do you say we talk about advantages? Do I have any new people in here? Do I have any demos? Do I have any people that are just getting going? If you are, or let me rephrase that. If you're coming back and you're looking for consistency, guys, I'm putting it on you right now. Don't sit in the shadows. Don't expect to become a great trader just listening to my voice. Go through and participate, post those pictures. But we're going to start everything with momentum. Everything starts with momentum, guys, because remember, the core of what we do in Nexgen is having momentum and then just buying support if everything is going up fast and selling resistance if everything is going down strong. And it starts with strong triggers, guys. Rule number one is the easiest lesson that you're ever going to get. Rule number one says that we must have strong triggers to look for a trade. So strong triggers is defined is as simply as a separation between the small and the large triggers. So if your background is red, the market is going down. It's really that easy. And if the market is going down, your look is separation between the small triggers, these solid lines, and the large triggers, these big dashed lines. That separation lets me know that the market is likely to continue in the direction of the trend. That separation lets me know that the odds are favorable for that market to continue in the direction of the trend. So this is your strong trigger look, and when you have this on your large chart, we're going to look to sell a pullback on the small chart. Going up when the background is green, separation, smalls above the large are wide, the space is there, the momentum is strong. When you have this advantageous look, this advantage of momentum, guys, you're simply going to buy a pullback on a smaller, faster chart. You're going to buy when it's going up. On your large chart, it looks like a tail. On your small chart, it's a retracement. When everything is strong to the downside, you're going to sell resistance on a smaller, faster chart. On the large chart, it looks like a tail when everything is said and done. On the smaller chart, it's a pullback to an area inside of favorable large triggers. You're going to pinpoint with strong triggers exactly where these tails are most likely to happen, guys, and that is exactly what we're going to do. If strength is an advantage, weakness is a disadvantage, and let it be that black and white, guys. When the small triggers work their way back inside of the large triggers have weakened, the small triggers have weakened, the momentum has gone away. Anything can happen up or down. This is the opposite of odds favorable momentum. So odds favorable, anything can happen. And you're going to see the life cycle, guys. Odds favorable momentum is absolutely the best. Look for your pullbacks. And then with both triggers down, when one of the small triggers gets inside of the large triggers, this is the first sign of momentum slowing. Guys, they have returned to the large triggers, but they haven't been eaten up by them yet. We can still look for short trades, just have to make sure the other chart agrees that our small chart's playing along. And then when both triggers are down and both of the small trigger lines work their way inside, you have a weakening, a slowing of the trend. Anything can happen up or down. You're going to hear that in class all the time. Short trades can still be taken, but they must be managed well. Guys, you're not in a position to manage if you're not a chart reader. So for the brand new user, odds favorable is the best of the best. For people that want to be consistent, odds favorable is the best of the best, guys. And you're going to be able to recognize odds favorable momentum at the drop of a hat. So let's go to a couple markets and let's see. That doesn't look right, does it? Maybe it does. There's a huge fight. Let's go and see if there is. There we go. Crude oil. The large triggers are green. The small triggers are red. They're not wide. I don't have odds favorable. But if I open up that chart, separation, odds favorable. Guys, I want you to get in the habit right now. Every time you see momentum, circle a tail. Every time rule number 1 is met, I want you to circle a tail. Every time the smalls have not been gobbled up by the large, I want you to circle a tail. Why are we doing this? Because we're training our brain that when I have momentum, damn it, I'm going to look for a pullback. And when I have momentum, I'm going to look for a pullback. So guys, here's your first study tip. You should spend your first day believing in momentum, because momentum breaks areas. Momentum keeps the market moving. Momentum fixes mistakes. Guys, go back every time you see a tail with odds favorable momentum and just circle it. And say to yourself, this is my best of the best look. This is the look that pushes the market in the direction of the trend. This is the look that gives me the advantage. And then guys, rule number 1 doesn't happen from start to finish. Rule number 1 isn't this non-stop thing. You'll go from odds favorable momentum and the market will push down, and you'll find that anything can happen. And this precedes reversals. And when you get into areas, these weak triggers let you know that these areas may hold. That's going to be the second part of what we do. But when the strength is there and the pullback happens, guys, we're pinpointing. That's our long. All the way up until we lose momentum, another reversal, we get the separation, that's our short. Strong triggers down, sell a pullback. Strong triggers up, buy a pullback. And then when you get indecision, guys, and here's the hardest part about being a day trader. When the small and the large don't agree, one is up, one is down. When they're not wide in the direction of the trend. When the colors of the triggers don't match the color of the background, right? Because if green means up for direction and the triggers are red, there's not a connection there. This is where you can sit on your hands and do nothing, guys. This is where the buyers and sellers are fighting. This is where people lose an awful lot of money. There's no reason. There's absolutely no reason to ever lose money when there's indecision in the market because your rules are very clear. Odds favorable is the advantage that you're looking for. Your chart read says it's time to go up. Here, your chart read says, my rules aren't met, it's not my trade. So rule number one, guys, I'm telling you right now, that's the one. And then when rule number one goes away, that's where we see these key areas hold, guys. And that's rule number two, making sure that we're not trading into a termination condition. But before we get there, is everybody good with strong triggers? Is everybody good with the idea that separation is what we're looking for? That momentum should be the first thing that we look for and that thing that we demand, right? Because momentum is likely to push the market, guys. And your money is important. And if your money's important, trade with a market that these guys are shoving full tilt boogie to the upside or the downside. So that's rule number one. Rule number two says don't trade into areas. Termination conditions false, guys. Room to profit targets are true. What does that mean? That means that if you get to one of the key areas on your chart, and guys, here's a little roadmap for what you're looking at. If you get to Fibonacci resistance, if you get to Fibonacci support, if you get to yellow 1-to-1s, if you reach a divergence high line, or you reach a divergence low line, then you have to run a simple calculation to understand whether or not you should be taking that next trade. And I'm going to give you that recipe right now, guys. But before I do, I want to tell you, these are where decisions are made. These areas on your large chart are where the large crowd are deciding to enter, deciding to exit. This is where the large crowd begins to fight with the other large crowd, where buyers and sellers duke it out and try to reign for supremacy. And you'll see that indecision in the market. You'll see these fluctuations around key areas. So on a large chart, we're going to use these lines to determine whether or not we've reached a spot where the market is likely to continue. And it's right here in the tops and bottoms section, guys. Areas that may stop the market, may reverse the market based on a comparison of the area. And the T3 trigger strength and location. Strength and location, guys. We're looking for blue Fibonacci support, yellow Fibonacci red Fibonacci resistance, yellow 1-to-1s, a cyan divergence low line, or a magenta divergence high line. These are all lines on a large chart that may reverse the market. We're also going to look at 3 divergences on a smaller, faster chart. That'll be the last lesson in termination conditions. But in order to determine whether or not an area is likely to stop, likely to reverse, likely to create a fight, it's pretty simple. The first thing that happens is price reaches the area. And if price reaches an area, those price bars get to Fibonacci support, yellow 1-to-1s, divergence lows. This is the catalyst for decision making, guys. And when price reaches the area, all you have to do is ask yourself, where are my trigger lines? And if my trigger lines remain above the area of support, no more short trades on the small chart. No more selling the pullback on the small chart because you've reached an area that may stop the market. Guys, this is a termination condition, and I'm coming right from the plan that I'm going to give you. Termination conditions at a low. There's that same picture that we used momentum on. When price reaches Fibonacci support and the trigger lines remain above, let's sit on our hands. Weak anything can happen triggers are a huge indication that this area may hold. And then it happens going the other direction as well, guys. And these pictures are all going to be in a PDF that I give you. If price reaches Fibonacci resistance and the triggers remain below, even with strength, it's okay to sit on your hands. The market may still reverse at Fibonacci areas, even when they are both wide up and odds favorable. So you have to combine the Fibonacci area location reading with the trigger line strength reading. If the triggers remain below, guys, no more long trades. If the triggers get 2 points above the area, smash through the area with that momentum, well, then we may look for a long trade. So it's really pretty simple, guys. If price reaches the area and none of the triggers break, sit on your hands and do nothing. You've lost your advantage. So when do we have the advantage back? We have the advantage back when the small triggers and the large triggers get to the other side of an area. So it's pretty black and white for new users. Whoops. I'm going to use Joel's trick that he taught me yesterday. If price reaches an area and the triggers don't break, stop. Sit on your hands, do nothing. If both the small and the large get to the other side of support, it becomes resistance. With odds favorable momentum, there's your selling the pullback right there. Guys, go. The path is clear. You haven't reached the next area. And then the final one that's talked about is if the small triggers smash through the area, but the large triggers haven't made it, this is going to be your first medium probability trade. This is when areas have the potential to break with all that strength. This will be the second trade that we talk about. And guys, we call this look a 50-50 look because 50% of your triggers have cleared the area, but 50% have not. And when you have a 50-50 look, let's keep going with the stamps, you're going to pause because you're going to make sure that you haven't given up momentum and you're going to make sure that you haven't given up an entry area. So guys, those are your options. Price reaches the area, triggers don't break, no trades. If price creates a divergence low, meaning that there's a loss of momentum, at an right? Price goes down, goes up, cyan line prints. The buyers steal the momentum from the sellers. This is not a termination condition, guys, because the recipe is consistent always. Price must reach the divergence low. And if price reaches the divergence low and the triggers remain above, this is an area that may stop the market. This is a termination condition. If this termination condition reverses the market, we're going to call it a strong bottom. And a strong bottom is the precursor for the highest probability trend trade that you can take. Guys, this is the pivot stop out. There's your pivot. Everybody tries to go long. This is where they got stopped out. Pretty clever, right? Pivot stop out. You're going to see this a lot and it's powerful. It becomes more powerful if it lines up with resistance. Price comes up, price goes down. No triggers, break the area. No long trades. Is everybody comfortable with that? Give me a Y in the room, please. If price reaches the area and the triggers don't break it, sit on your hands and do nothing. Guys, you've lost your advantage of a clear path. And then from here, it pushes all the way to support. And when it gets there, the triggers all remain above. You no longer have a clear path once again, guys. 90% of your day is spent reading indicators. And then it pushes up and it reaches resistance. Divergence high and a second resistance. Creates that pivot stop out. It also has twice the resistance and it also has those weak triggers. Guys, this is a beautiful termination that does reverse the market. This is a strong top. And when that strong top gives me odds favorable momentum, separation between the small and the large, and all of my triggers are below resistance and price hasn't reached support, I also have a clear path. Guys, the top of that tail is your strong triggers sell resistance. That's the entry for your highest probability trend trade. That's the absolute best of the best. And guys, that's the trade that typically wins 70 to 80% of the time. This is the trade that teaches you to be a chart reader. This is the trade that sets you up, that gets you into the market, creating confidence through the memory of success. So guys, I want you to allow it to be simple at first. I want it to be black and white. You either have a clear path or you don't. You either have odds favorable momentum or you don't. Recognize these advantages. Speak to yourself in terms of advantages. Mike, so you're going to start taking Ron's trades? Man, I don't have it on mine either. Damn. I'll tell you what, let's give ourselves something else to think about. What do you say? Let's give ourselves more indicators to look at that we don't need. So you're going to right-click on your chart, and you're going to go Fibs Pro Trader. And it's just a reversal bar marker. So let me see if I can find it. Maybe it's not in the Pro Trader. That's not it. Pro Trader new. Indicator, indicator, indicator. There it is, reversal bar marker. Show reversals, show reversal price. Reversal bar marker is gold on my large chart. I could make it green if I wanted to. Or I could make it blue, I could make it white. Reversal bar marker 1, reversal bar marker cover, show reversals, show reversal price. So Mike, there you go. And the same is true if you're on a smaller, faster chart, because that's where he really sets his targets, right? Let's go to the T3 Fibs Pro Trader, and let's go down here, and under reversal bar marker 2, you have to show reversals and reversal price, and then when I apply it, it's going to take this reversal bar marker from my large chart, and it's going to transpose it synthetically to my small chart. And that'll come up in just a second. Oh, there it is. One more thing to think about that isn't momentum, a clear path, or an entry area. Guys, I never tell you what trades to take, but I'm going to tell you right now, if you're looking at Ron C's trades with big goo-goo eyes and you can't do all this, you're just going to get your ass kicked. Respectfully, I say. You're just going to set yourself up to think about too much stuff that isn't going to serve you well. Trust me, I watch it every day. Guys, price reaches yellow 1-to-1s. Absolutely none of the trigger lines break through. I'm not going short. You can't make me go short. There's no reason to go short because this is an area that may stop the market. Thank goodness I didn't go short because the buyers came back and shoved that thing to the upside, right? But notice that all the triggers are below. Guys, my chart read says that I can't go long into terminations. My chart read says I can't go short into terminations. My chart read says that I don't have a trade. And I don't have a trade for the next 30 minutes when triggers don't agree and when paths aren't clear. This is my 90%, guys. I don't have to catch every move in the market. I don't have to be in every move. Most of it's simply not my money. But when a termination creates the reversal, and when the reversal gives me momentum, and with that momentum, all of my triggers have cleared the area and they haven't reached the next, I've got momentum. I'm going to buy a pullback. My rules are met for the high probability trend trade, and that's the trade that typically wins 70 to 80% of the time, guys. That's the trade that creates confidence through the memory of success. That's the trade where you get to keep all the money right where the market's likely to go, and if you give it all back here, you're still negative, even though you caught the best of the best, guys. So it's not always a matter of taking all the trades. It's not always a matter of getting the most out of every trade. It's not giving the money away when there isn't money to be made. And I hope that makes sense. And I'm going to find a picture that I took, and I meant to share it with class, and I didn't. So I take so many pictures. But I took the rule number 2 picture, and I did it with crude oil because I know all of you look at crude oil. And dag nabbit, where did I put that picture? And guys, I am a broken record. For those of you that haven't been in class with me a long time, I am a broken record. I'm a broken record every day. I say the same thing every day. And I do my best to try to keep you guys out of trades where there are no trades. And I can't for the life of me find this picture. And I'm going to find it, and we're going to recreate it is what we're going to do, guys. And we're going to talk about rule number 2, and we're going to talk about 90% of the time, and I want you to see something. Because it's important to me that you guys don't sit around and just blow out accounts for the fun of it. And I think this was the one from yesterday. You guys ready? I'm going to blow this up. And I'm going to take this picture, and I just want you to see something, guys. I don't have a clear path down here. I hope the market continues down. It didn't. My rules weren't met, and I just gave up $200. Termination reversed it, gave me odds favorable. I take the right trade, and I make $500, but I'm only up $300, right? And then I hope the market continues, but it doesn't, because it's a termination condition, and I give away another $200, and now I only have $100. And then I hope the momentum wins, but it doesn't, and now I'm down $100. And I really wish it would go up, but rule number 2 says don't, and now I'm down $300 or 30. And I do it again here at an area that never broke, and now I'm down $500. And I tried it one more time here, and I'm down $700, maybe even more, because I didn't use good management. And guys, it's so easy to compound your losses when the market isn't giving you what it's supposed to give you, when you don't have those advantages. But the cool thing is, if you just wait for it to be right, if you just wait for that momentum, if you just wait for that entry, guys, you can capitalize all day long, and you get to keep the profits that come from the great trades instead of giving them all away when the trades are bad. I hope that makes sense, and I hope it doesn't sound preachy. But guys, that's the goal right now, is we're developing patience. We're believing that our money is worth the best of the best, guys. And the best of the best is understanding that momentum by a pullback, is understanding that that's off the table if you hit an area and the triggers don't break. And it really can be that simple, guys. Give yourself momentum defined by strong triggers on the large chart. Give yourself a clear path defined by not reaching areas on the large chart. And then when you have it, guys, buy a pullback if it's all going up. Sell a pullback if it's all going up. Before I show you how to identify that pullback, I want to show you one more termination condition, because when you look at the rules and you talk about the rules, we've identified the lines that may stop the market. You have a very simple recipe for recognizing it. Is everybody cool with the recipe? I hope so. When you say can't find historical reset works. Oh, you find historical reset works. I'm not sure what you talk about, Cav. Sorry. There's one more that's listed right in the list, guys. It says any third divergence in the same area. This is a termination condition that you're going to see on the smaller, faster chart. That faster chart will show change that you can't see on the large chart. And when you have 3 divergences, 3 losses of momentum in the same price range, it may terminate the trend. And 3 divergences is identified through 3 cyan lines, light blue lines from a low. Good morning, JW. 3 magenta lines from a high. And guys, that's it. 3 of these, same price range. The negative number doesn't matter. It's just a byproduct of the calculations. 3 divergences may stop a trend, guys. Oh, I got you. Thanks, Kev. And 3 divergences you're going to see on a small chart before you see it on a large chart. And it becomes more powerful with anything can happen triggers. And it becomes more powerful when the third pivot's higher than the previous from a low, lower than the previous from a high. It's a head and shoulders pattern. Guys, you're going to see this on a smaller, faster chart, and it's going to tell you don't take that next trade. If your large chart says up and your large chart has a clear path, and you go to look for that entry and you see 3 divergences, that's a termination condition. You no longer have a clear path. Your rules aren't met. Don't take the trade. If you're in the perfect short, if you sold the pullback and everything was wonderful and you get 3 divergences, you can exit the trade before it goes against you and takes all your money. So 3 divergences is not only going to help you identify when it's time to not take a trade, it's also going to become a tool as you become a chart reader to manage your trades. And this look here and that look there is going to help you identify when the market may be changing. So guys, that's termination conditions. When you have them, don't fight them. because you don't have a clear path. And it takes 3 advantages to get into a trade as a new user. And as you get comfortable, you're going to find more trades. But once you have momentum, once the large chart says up, that most current bar, check it out. Wow, where'd it go? Most current bar, the momentum is up. Most current bar, the path is clear. Rules 1 and 2 are met. I'm now going to turn my attention to a smaller, faster chart. When my large chart says down, when my large chart has strength, when my large chart has momentum, guys, I'm going to sell a pullback at an area inside of favorable large triggers, very much like Paul just did. Best entries only. You guys want to know how Paul did that? Look at that entry. He damn near called where the market continued down. He damn near called where the top of that tail was. Paul, what is this voodoo that you do so well? The class asked. If you want to emulate somebody, emulate Paul. Go after what he's doing. Guys, right here from the spreadsheet that I gave you in the room, let's talk about that short entry. Rules had to be met, right? Odds favorable momentum, clear path. Everything says down. The large chart leads the way. If it does not, I'm not taking the trade. My rules aren't met. My advantages aren't there. I don't even want it. Don't want anything to do with it. Large crowd says up. Large crowd says strength. Large crowd says nothing in the way. Large crowd says down. Large crowd says strength. Large crowd says nothing in the way. Let's let these yahoos over here get us back to our best of the best entry. We don't just jump in. What we do is we say, let's wait for a pullback to an area inside of favorable large triggers. Rule number 3 says, I'm going to use a limit order because I'm awesome and I know exactly where the market is likely to continue. And if that market is screaming down, well, shoot, I'm going to sell it while it's on its way back to my area. I'm going to buy it. I'm going to sell it when it's going up. I'm going to use that limit order at an area, fibs, midbands, yellow, 1-to-1s, because the market bounces off of things, right? The market bounces off of lines on a small chart the way the market bounces off of lines on a large chart. But since the large chart is smaller and faster, we let it pull back to these areas, and we want them to be inside of triggers, guys. And for the brand new user, we want them to be inside of favorable large triggers. And I'm going to show you exactly what that means. Favorable large triggers means that your large triggers, which are just the one half of the equation for momentum on the small chart, right? Large triggers are smooth. Look at the strength. Momentum is momentum, guys, whatever time frame is. The more of it you have, the better life is. And then your synthetic triggers are these stepped lines. And all the synthetic trigger is the large trigger from your large chart. That's all it is. It's nothing special. There's no magic in it. But when the large trigger and the synthetic trigger are overlapping, when they're one on top of the other, two snakes riding piggyback, guys, well then there's not a lot of room for there to be a line inside of them. That's the way I want you to think about it. There's not a lot of room for a bounce point because they're so tight one on top of the other. And we're going to buy at an area inside of triggers. So the tighter they are, the smaller the window where the market is likely to continue is. The least amount of risk I'm going to have on a trade. So embrace favorable large triggers, guys. Split triggers, that big distance between the two. What happens is these triggers are a correction spot. These triggers are where the market is likely to return to, but the triggers on their own don't create a bounce. It's just a moving average. It's the lines that create a bounce. So when they're split, I don't know if it's going to go to the top trigger or the bottom trigger. I don't know if it's going to stop up top or go down to the bottom. So my stops have to be way down here below those other triggers. So for the new user, this creates confidence because there's less risk. It's easier to hold on to the trade. And I put the split trigger look in there too. So when everything says down, I'm going to wait for the small crowd to do their thing. That comes with a reversal bar. Once they give me a reversal bar, I'm going to look for my trigger lines because I know that price likes to correct to them. And the trigger lines on their own are not an entry point. All the trigger lines are doing is they're telling me where to look for those lines. So from the top of my triggers to the bottom of my triggers, I'm going to look for fibs, mid bands. Whoops, I skipped a step. I'm going to look for fibs. I'm going to look for mid bands, something solid for the market to bounce off of. I'm also going to look for yellow 1-to-1s, but if they're outside of the triggers, don't even worry about them. They might as well not exist. So I'm looking for the areas inside of favorable large triggers. Guys, is everybody cool with this? Because once you find this box, once you can create this box on your chart, the only thing left to do is activate a limit order at the bottom end of it. And say, I am not in control. The only thing I'm in control of is whether or not my rules are met. And my rules say that I need momentum and a clear path, and that I have to go through this process of identifying where the market is most likely to continue. And once I've done that, because of the strength and the clear path on the large chart, I will activate a limit order at the bottom of the window for a short, at the closest point to price. Because I don't expect the small crowd to be able to fight all of that strength and all that momentum. And guys, if the small crowd blesses you with the pullback, you're in a short trade with odds favorable momentum. You're in a trade with absolutely no termination conditions. And you're in a trade having entered where the market was most likely to continue. You have turned your chart read into a trade. Does that make sense, everybody? You did not take a trade because you wanted to be in a trade. You took a trade because your chart read said, it's time to go, Mr. Novak. Pull the trigger without hesitation. You have every advantage. And guys, this is a trade that typically wins 70 to 80% of the time. And let me show you what else. Walter, a limit order means, I'll show you. A limit order means that when I've identified my window of opportunity, when I have decided where the market is likely to go, I right click, and do you see how that says buy limit to? This limit order means that if the market comes back and hits that order, I'm going to be in a long position. So what I've done is I'm not waiting for the market to get there and then pushing a button. I'm literally just chumming the water. And I'm saying, come get me. And if you get to 71.59, I am in a long trade. And if you get back to my limit order here, then I'm going to be in a short trade. I literally wait for the market to come up. I will sell it as the small chart is going up. I will buy it as the small chart's going down. And Walter, this is how we reduce our risk. Because when we're in at the best area, when it comes back and it hits that limit order, not only do I know where the market is likely to continue, right? We made that awesome box from the highest point of resistance to the lowest. Once I understand where the market is likely to continue, I also understand where the market shouldn't go if this is going to be a successful trade. So I'll put a protective stop 4 or 5 ticks outside of that window, outside of that point where the market is likely to continue. And what this does for me is it says, hey, if the market comes up and gets past that first line of resistance, if it gets past that second line of resistance, if it breaks through that third line of resistance and the mid-band and continues up, I know that I don't want that trade anymore. And what this does, by defining where the market is likely to continue, it allows you to get the absolute most out of the trade. It allows you to get the absolute least amount of risk. And we spend so much time on the high probability trend trade. We spend so much time on identifying the entry for the high probability trend trade, because when you wait for the pullback to the area, you have the longest distance to get to your profit. When you wait for the pullback to the area, you end up with the least amount of risk on a trade. And guys, once you can identify the area, you're absolutely welcome. Walter, don't ever stop asking questions. That's how we get to where we want to be. Guys, when you wait for the pullback, when you learn to identify this area, 70 to 80% of the time with the high probability trend trade, guys, this is your result. This is the one. This is the good stuff. And then once it gives you a reversal bar in the direction of your trade, guys, you can even reduce risk further. Rob, 13.2 is direction. 13.2 is direction, right? So you said crude oil. Well, now it's red. But it was green, right? But the 5-1 background went red. Smaller, faster chart, Rob. So what happens is we wait for them to agree, right? We wait for the termination to create a reversal. We wait for momentum. And then guys, notice how one trigger is down and one trigger is flat. I have a mid band here, but I don't have favorable large triggers. Which one is it going to correct to? And my large triggers aren't wide, so I don't really even have odds favorable momentum. And guys, if it goes down from here, that's cool, but my rules aren't met. I hope you guys see that. Saving and recall when it's time. So Rob, you're on Snagit, right? So every time you take a picture on Snagit, there's a couple ways. Here's the picture that we just took, right? And if you click on Show Recent, you'll see like the last 20 pictures that you took. That's one way that it automatically saves it. And then if it's not in the bottom here, you can click on Library, and you'll see every picture that you've taken. This goes all the way back to when I put my new computer in. And then let's say that it's over here, but you want to bring it back up. You can double click on it, and it'll bring it over to your recents. And then from here, there's two ways to do it. You can right click and copy the picture, and then come over to the room and just drop it in and go, hey, Mark, check it out. It's a polar bear in a blizzard. Or you can click on the share link, and that brings me to my screencast link, and that puts that screencast link on my clipboard, and then I can paste that link into the room, and it'll share that same picture via the link. And then when you have that link, you can go and you can put it into your spreadsheet. Let's do that. So let's say that white picture is the perfect trade for me. If I right click and I just paste that link into my spreadsheet, guys, it gives me the screencast link, right? And it says, I don't know, 050 GYF9J. Gosh, I don't know what's going on in this picture. So what I do is I go to the Insert tab, and off of the Insert tab, I'm going to click on the link button. And guys, this creates the hyperlink, and it'll literally take that link, paste it again into the address bar like you're going to Google or something. And then under text, I don't know, put awesome trade, right? Put great short, great long, great this, great that. And now you're going to come back and you're going to study these pictures every day. And that's how you get them into the spreadsheet. Whoops. And then because I like to give you guys a fish, but it's also important to me that you learn how to fish, there's your screen capture and sharing in class as well. We call these instructions, gentlemen. Turns out if you read these, you don't have extra screws left over when you put the grill together. Allegedly, I'm not sure on that. I've never actually read them. I've just heard stories from the elders. So Ron, it does, Joel, if you've used it 5 or 6 times, it will default. But if you haven't been using it, it won't default to it. So you got to do it a couple times. And then Rob, just give me a couple, man. Do it right now. Don't worry about finding a trade. Take a picture of your charts. Tell me what you see, guys. Why do we look for favorable large triggers? Because I don't have any freaking idea where it's going to correct to. And that takes away my advantage on an entry. Does that make sense? Did everybody see that? The triggers never got wide, and it hit a mid-band. And the large triggers, gosh, there was a whole Renko bar's worth of room to get back to them. Ladies and gentlemen, say hello to the gap theory. If you hit a mid-band and the large triggers are a full bar away, this mid-band is a termination condition. That says no more short trades. Not a clear path. And I know that it seems like I keep that secret from you guys, but check it out. Right from the tops and bottoms, if you hit a large chart mid-band and the large triggers are a full bar away, don't take the short. It's a termination condition. Pretty freaking cool, right? Nobody had to lose any money here. Because Rule 2 said don't do it. Because your chart read said don't go short. So guys, that's the high probability trend trade. Everything about it is designed to get you into the market at the right spot. Everything about it is designed to give you the ability to read your charts, to recognize advantages, to make sure that you're doing what you need to do. I created this one the other day. I changed the verbiage to try and get everything 100% consistent. I changed it up to give you pictures from each rule being met. I kind of spliced those two that I used to give. So when the momentum is its strongest, guys, sell retracements at areas is the core of what we teach us. And I don't know why that said small. That should say sell. No, it's not. You should buy or sell small retracements. I'm not reading the whole thing. When the momentum is its strongest, there we go. Buying or selling small retracements at areas is the core of what we teach us, guys. It always has, whether it's the trend trade. The trend trade is just a momentum trade that's using the large chart for momentum and the small chart for retracements. You're going to see them using small charts and market flow charts. You're going to see them everywhere. But the core to what we do is momentum. Your first trade's the high probability trend trade. That's what we have just gone through for the last 45 minutes. And it uses the advantage of momentum coupled with a clear path on a higher time frame to initiate entry on a smaller chart. The large chart says up. The large chart does direction, momentum, and areas. The small chart is nothing more than an entry chart, guys. And that's how we've used these three. I like this picture. So the first thing you need to do as a brand new user is you need to identify your entry, guys. And I've given you a checklist. And the checklist has 4 options. Is it a termination that reverses the market? I'm using the language. If it is, it's a strong bottom or a strong top. Do I have strong triggers on the large chart? If it is, there's your picture. No terminations. Here's terminations at a low as well as terminations at a high. And then do I have the area for entry inside of favorable large triggers on the 5-1? Guys, I've never had anybody hit yes on all of these and do worse than 70%. So if you're sucking wind a little bit, if you're losing more than you win, this may be a nice thing to come back to. And then the same way that your entries are very pragmatic and methodical, guys, let your management be the same thing. The biggest thing that I find with traders is that everybody gets really good at getting into the market. They're like, this is the rules, this has to happen. I am so focused on making sure that I have momentum, a clear path, and an entry area that I'm always in the market at the right spot. But I can't make money, Mark. I keep moving my stops. I keep holding too long. I keep getting stopped out like way inappropriate. And guys, that's the second half. We're eating an elephant becoming day traders. And you have to do it one bite at a time. The first bite is defining your entries. Your second bite is learning how to manage it. So on the same spreadsheet that I gave you, the same one you should be filling out, guys, there's a very pragmatic approach to management. And it all starts with the best entry, right? That's the first piece. Get in at the area where the market is most likely to continue. If you do this, you've already given yourself a statistical advantage. And because you understand where the market is likely to continue, you also know where it shouldn't go. And that's where your stop goes, 4 or 5 ticks above it. And guys, I'm telling you, sometimes it's 12 ticks, sometimes it's 8 ticks, sometimes it is 17 ticks. Your ATM strategy should be designed to give you time to put your stop where the market shouldn't go. And at this point, there's nothing to do. You're either going to get stopped out. It's a normal part of a positive equity curve, guys. It's a cost of doing business. Anything that wins 70% of the time has to lose 30% of the time, which means every 10 trades you take, you're going to lose 3 of them probably, most likely, statistically, which means that you have to be okay with losing trades. You graduated college with DOS, Control-P to print, blue-collar job last 30 years, still learning Windows, struggling with something simple as picks and software uses. It's okay, Rob, because it's not your thing, right? So you've got to learn it. You've got to come from day one, and you've got to learn how to use it. That big tractor in your profile picture, I'd kill somebody. But I bet you it's second nature to you, everything about it, right? Farming is probably second nature. Using that tractor, crop rotation, growing, finance, all the stuff that goes with it It's no problem. How long did it take you to get good at it? Did you wake up one day and say, I want to be a farmer, and the next day you were a badass old McDonald? No. You got better every month, every year. This isn't going to take you 50 years. But when did you start getting successful? Maybe the first year you floundered, right? But you were getting a foundation. And then you sought out people that were probably better at it than you, and you let them help you. So it's a process, and every process has a different thing, right? Everything has a different timeline. But if you want to keep it the easiest, right? This is your backyard garden. Where the market should continue, where the market shouldn't go, guys. This is how we manage trades when we're brand new. And then if the market gives you a reversal bar, you're going to reduce your risk a couple ticks above it. That's it. There's still nothing to do. You're either going to get stopped out or it's going to go to your first target. But that reversal bar says that the momentum, the clear path, everything is working. And that's it. Move your stop, sit on your hands. If then, very methodical, no opinions. And then if it reaches your first target, awesome. You just made $100 and you went to break even. You have no risk. Sit on your hands, do nothing. Don't psych yourself out. Don't let little fluctuations on this tiny little entry chart override everything that's going on the large chart. And if you hit your second target, it's only $200 in the distance. And guys, that's an easy $300 with all the advantages. That is confidence through the memory of success. You have defined where the market, watch this, let's go through all of it, right? And I'll show you. You have defined the direction of the market. You have defined the strength of the market. You read your indicators. You have decided that your rules are met on the large chart and you pinpoint exactly where the market is likely to continue. You understand where the market is likely to continue because you're a chart reader. You understand where the market is likely to go with all that momentum because you're a chart reader. And when you get there, you understood that the market was likely to stop because the trigger line stayed above because you're a chart reader. Guys, this is it. I can't make it any easier. Strong triggers, sell a pullback, right? So let me give you a plan. Let me keep you focused. Let me keep you 100% committed to the best of the best until you're so freaking good at the easy stuff that you have to wander outside of that realm. This plan is a stepping stone in your learning journey. It's designed to optimize your chances of success with the high probability trend trade or the 50-50 trade, that area likely to break trade. It's going to be your simulation study, class feedback, and continuous practice. Please notice that class feedback is underlined. You will create a plan tailored to your personal goals based on your experience reading in the indicators. When you're a chart reader, you're going to create your plan, right? When Ron C. became a chart reader, Ron C. created his plan. When Paul became a chart reader, Paul created a plan. When Cream White became a chart reader, he developed a plan. And each and every one of you guys are going to do it, but until you have the wherewithal to do it, until you're a chart reader, why not do the one that's easy? I've had people get funded in their Apex accounts in the first 30 days with Nexgen, keeping it simple, guys. And it starts with never fight the large chart direction or triggers. It's a recipe for disaster. Identify your entry. There's the same checklist. There's all the pictures. Learn how to manage your entry, and then you will craft a plan when you learn how to read your indicators, guys. You are not obligated to stay to that very conservative $300 trade, but until you can pull the emotion out of stop placement, until you can pull the emotion out of targets, that's a pretty good one to keep you focused, guys. This is not shackling you to these two trades for the rest of your life, but this is your best chance of success, guys. So there's your KISS trading plan. Use it if you want. Avoid it if you don't, right? Doesn't matter. But I want to see you successful. That's a great way to do it. And you've got to study. And that's the biggest thing, and that's what bums people out, is I've got to study. I've got to go back, and I've got to be able to find these entries. And I can't find them live, Mark, because the market's moving too fast. How do I fix that? Same thing we just did. When you see momentum on a large chart, don't even worry about the clear path. When you see momentum on a large chart, circle that damn tail, because that might have been your pullback to get you in. Rob, let's see what you got. Boom! Like a boss. Most current information, both charts, good stuff. And then you could, Rob, if you wanted to, you could click and drag and put those two together. And you took a long at 77.32, which is right here. Pull back into favorable large triggers. All right, so Rob, what's the one? And I'm only going to go after this right here. Pull back into favorable large triggers. I'm going to change something on that. Rule number 3 says pull back to an area inside of favorable large triggers, right? And guys, this is where language becomes very, very important, I believe. Because pulling back into large triggers is awesome. Pulling back to an area inside of favorable large triggers gives the market someplace to bounce. And you'll notice this is crude oil. Oh, we're on different contracts, Rob. Crude oil rolled. I'm on 424. You are on. So do me a favor. Take a picture of your crude chart right now and post that for me. And we'll go through the whole thing. And I'm on 424, Rob, because it rolled. Crude oil rolls on the 15th of every month. So I'm on a different time frame than you. So just take that picture real quick and drop it up. And I'm going to show you guys how the feedback works. And then I'm going to take a little break. And you guys should do the same. Because, you know, why not? But because I don't have 324, Rob, I can't go through that window of opportunity process with you. And I want you to see it on your charts because there's something cool about seeing it on your own charts that helps you out. Or we'll just do it on my chart. So Rob, we're going to assume that I had odds favorable momentum. We're going to assume that I had a clear path. At the time of the reversal bar, my rules say that I have to look. There we go. Cool. Thank you for that. And you're getting good at it, right? So I'm going to go through the whole read. Because remember, the large chart leads the way, right? So the first thing that we're looking for, always, every time, rule number 1, says strong triggers. And Rob, you know that the strong trigger look, right? I'll put it up in the upper corner here. The strong trigger looks like small's above the large, the space is good. And you saw that, right? You saw the small breaking above the large, and you thought to yourself, hell yeah, strong triggers. I know you swear when nobody's looking. And then rule number 2, Rob, says no termination conditions. And guys, I want you to see how the chart read makes you decide whether or not there's a trade. So since rule number 2 says no termination conditions, what I have to do, Rob, is I have to look at the top of the bar where it's trading. And it was all the way up there at 77.45. And you can see that it was all the way up here at 77.45. Are you good with that? It was the most current bar at the time. Cool. So what are the rules for termination condition? And this is where I think annotating it is important. Price reaches an area. If triggers don't break, it's a term. So when we look at where price is, and it reached this divergence high, are you comfortable with that? Price reached the divergence high, and the trigger lines didn't break, right? So rule number 2 is not met. Do you see it? And I'm telling you, you've got to just keep doing this because what happens is it's pretty cool. Is you've got trigger lines, absolutely no worries. I've seen you recognize it 1,000 times. So the next step is to get really good at recognizing termination conditions in the moment. So in the moment, there's no clear path. And if you don't notice it, and that's okay, you wait for the reversal bar. And at the time of the reversal bar, I have to go from the top of the triggers to the bottom of the triggers, right? And I'm looking for a line in there. I'm looking for some sort of line. The only line even close to the trigger lines, hovering right on the very bottom, is that mid band right there. Do you see it? That's my spot. If this trade is going to break that area, that's my bounce point. Exactly. So my goal is that it comes back to this mid band. If it does, I enter the market, and the hope is that it goes up. But what ruined the party? Rule number 2 not being met. And look what the market did. At that key area, decisions were made, and there were a lot of sellers that gave a big shove. And that big shove, because there wasn't a clear path, whoops, stopped you out and took your money. Does that make sense to everybody? This is how you get great at simplicity. If every time you look at a chart, especially after the fact, you ask yourself the 3 simple questions. Did I have strong triggers? Did I have a clear path? And if I did I have an area inside of favorable large triggers? So Rob, if there wasn't this pink line and everything was going up, exactly, it just takes repetition, and you had a clear path, that mid-band is your bounce point. And if that's where the market is likely to continue, right there at 29, your protective stop is about 5 ticks below it, where the market shouldn't go. And I know that all of you guys have a 12-tick stop in there, right? If I'm in at 29, well then shoot, my stop's down here at 17. Isn't that ridiculous? Look how far below everything is. And this is what understanding the window does for you, is I know that if it drops down here to 24, hell, I don't want to be in that trade anymore. Is it worth 50 bucks with momentum and a clear path? It's always worth 50 bucks to me. And I'll take that trade. And if I lose, it's a cost of doing business. And if I win, I know that I had every advantage. But if it's into a termination condition, I have to have realistic expectations on the likelihood of this one winning. I hope that makes sense to everybody. So you can go back, right? And let's go back. And let's look at one of these. So I had momentum and I circled tails. Whoops. I had momentum and I have 2 tails circled, right? Does everybody see odds? I've got momentum and I have a clear path and I'm past the other fib, guys. Everything says this market is going up. Everything says it has momentum. And everything says really that there's nothing in the way to create a bounce. Give me a Y if you see it. Rob, large chart says go, right? Large chart says let's look for an entry. And it's already happened. So let's go see where those tails pulled back to. Let's go take a look. Your first one didn't quite make it, right? I don't have any areas inside of favorable large triggers. If I take the trigger look, there's no areas there, right? Not my trade. Here's the second one, and this is the hardest lesson, guys. If I look at the trigger lines, there's no areas inside. Are you guys okay saying that's not your trade? Rules 1 and 2 were met. Rule 3 wasn't. And I want you to see something kind of cool. 1, 2, 3 divergences in the same location. Geronimo. And the idea, guys, is if this one doesn't get you, you're like, ugh. And if this doesn't get you, you're like, damn. And you're like, you know what? I know it's going up. I know exactly what the market's going to do. I'm going to take that one. And then it just kicks your butt and you're angry at yourself and you're angry at the world and you're angry at the market. And John Novak is some kind of predator. But you just didn't follow rules, guys. So I want you to keep it that simple. I want you to keep it that pragmatic. I want you to always focus on the chart read, not the trade. And the chart read says that you have to have momentum, a clear path, and an entry area. So I'm going to take a break because that was a lot of gum flapping on my end. I need you guys to save me from myself in the second half of class, guys. I need you guys to post pictures. I need you guys to ask questions. I need you guys to dictate what's going on. Shift F3, Joel. Shift F3. If you have 4 open workspaces, Shift F3 will toggle you between them. Just like that. Oh, man. Odds favorable, there's a tail. Holy smokes. I'll let you guys stare at that and let it soak in. I'll be back in about 5 minutes, guys. Post them if you got them. Ask questions if you have them. Let's have an awesome second half of class. All right, y'all. Let's get into that second hour or that second half, whatever you want to call it. It's 10:30 a.m. That was a pretty big drawdown, wasn't it? Not a drawdown, but a pretty big push to the bottom, I would say. Notice how that fib never cleared at 78.45. Large never got above it. The small did. There was divergence, and it killed the trade. There was no divergence, and it allowed you to make money. Guys, great NASDAQ lessons there, but great 50-50. This is your second trade. This is your medium probability trade. Lyle, I like a market where my rules are met. I don't care what market it is. I don't care if it's gold or the S&P. I don't care if it's oil. Doesn't matter to me. I trade 99% NASDAQ because I've gotten to a point in my chart reading that I'm very comfortable with the speed of the NASDAQ. When I see this look, I don't go short. When I see this look without divergence, I go long. And when I see this look with divergence, I don't do anything. And I probably go short right there. That's my thing. Is the only thing that I worry about is whether or not my rules are met. I have momentum. I don't have a clear path. I'm not doing anything. Right? So there's no opportunity on the NASDAQ, so I go to crude oil. And on crude oil, I've got momentum. I don't quite have a clear path. I'm just not doing anything. In the S&P, I've got momentum and I've got a clear path. Well, shoot. I'm obligated to try to sell that thing. Does that make sense? That's the only thing that I worry about. And guys, my S&P is a little jacked up, but so for me, Lyle, I can go through and I'm pretty good at reading charts. I'm pretty good at understanding if my rules are met. And it literally takes me that long to do it. And the reason it takes me that long to do it and why I can toggle between three markets is because I've probably got 10,000 pictures. I'm so comfortable with what it takes to get me into a trade that I don't hesitate. I don't talk myself out of trades. I simply say my rules are met. Because my rules are met, I'm obligated to enter the market. Because my rules aren't met, I'm obligated to not look for an opportunity. And guys, that's where I want you to get. I want you to get to the point to where you don't care what the market does. It either gives you your rules met or it doesn't. And when it does, you take the trade. You NASDAQ traders, here's a good one for you. This is a sexy large chart. That's right. I used all caps sexy. Momentum, momentum, momentum. Buy a pullback. I put but a pullback because it was early. Momentum, momentum, momentum. Buy a pullback. And guys, this is the NASDAQ. The NASDAQ's a different animal. Do I have any NASDAQ traders in here? Do I have anybody in the NASDAQ that's like, oh, the NASDAQ's hard? Trying to get your grips with it? Nobody? Cool. Well, then I won't talk about the entry because I don't want to confuse anybody. But guys, when the large chart is cranking, when the large chart is awesome, buy a pullback. On the NASDAQ, because it's a different market, on the NASDAQ, because it's not the S&P or crude oil, because it is a different time frame, because it is a more volatile market, I never fight the small triggers on my entry chart, ever. If they're down strong, I don't get in at the mid-band. If they're down strong, I don't just jump in at support. I give up 80 bucks, but I take the close on the correct side. And guys, what this does for me is it keeps me from getting assaulted 3 or 4 times. And I just get in on the other side of momentum, and it usually works out pretty well. So if you're a NASDAQ trader, that's one of the best lessons I can give you. Never fight the small triggers on your entry chart. You will rarely win against them. Rarely. You will every now and then, but you will very rarely win against the small triggers on that smaller, faster chart. All right, where are the pictures? Let's take a look. Joel came in. Joel's doing the circle and the tails. I love it. He knows that momentum by a pullback, right? But he also says that there wasn't a clear path and he had split triggers, so he's just not taking it. And that's okay. And sometimes you have to be okay with it not being your money. Joel, that's a great chart read. Nicely done. Ron C. says, when everything says up and the path is clear and my smalls are outside of the large, why not make a little money? Same old trade, let it run past the fib because of momentum. Amen, Ron. And yeah, that was Safia that I was talking about. And guys, I'm going to read it one more time, what she put in the other room. I came with no trading experience and I didn't know squat. Went to class, listened, and then watched videos. Then practiced and practiced. It's hard work and it made me good at taking this. There is no shortcut. Guys, there is no shortcut. And I'm going to tell you right now, texting, DMing people, asking them how they do what they do, don't put that burden on people. Weak top, great read. Guys, this is how you get to where you want to be. Is you take pictures of things and learn your rules. I hear from people all the time. People keep texting me. People keep DMing me. People keep asking me what I do. Guys, you want to know what the successful people do? They learn to recognize advantages, and then they formulate a plan, and they stick to it. That's it. That's all there is. That's the whole secret. You just have to do it. Miss Debbie, odds favorable for the win. Termination creates the reversal. Everything says down. You take a pullback to resistance inside of those triggers, and you get paid at support. Does everybody see what Miss Debbie did here? Does everybody see the momentum on her large chart? Does everybody see that when the chart was strong, she sold a pullback? And she identified exactly where the pullback was likely to happen. She got paid at the first trouble spot and got paid at the second trouble spot. And Debbie, you are an amazing woman. Your trading has been so much fun to watch. You're so consistent now. Everything you do looks exactly the same. Dwight, hey, momentum for the win, right? Momentum trade should have waited till the 13.2 price cleared the cyan line. 3 magenta divergences, odds favorable, slight pullback entry because of 1-to-1s. So Dwight, the only thing that I can say about this, are you with me in here? I love the look. 3 divergences, crazy momentum, everything is awesome. These are the ones, if I have 1-to-1s, I wait for the pullback to them. Because you've got a little bit of stutter here, I love the pullback. And I love that you capitalized, right? You knew that it could go back there. And your stop was appropriate. And I think that's brilliant. I don't know. I get it. So 23 was the trouble spot. I like these trades further up here on the small chart. Otherwise, I kind of wait for the pullback here. Great stop placement. Awesome momentum for the win. And guys, this is kind of cool. This is momentum for the win, right? When your charts look like this, it's probably going down. And he knew exactly where it was going. And that's brilliant, my friend. What a beautiful, beautiful trade. We're just going to teach you to add on here and then hold that mofo and add on again here at the mid-band inside and just ride that wave of awesomeness all the way to support. Great trade, Dwight. So much growth from you people in this room. So much just awesome putting the stuff together. It's a blast for me to see it. I hope you guys know that. Mr. Mike, no, you didn't take it. Let's see, didn't take this trade, but looking back at the market, I saw this, and it looked like my kind of trade and my newbie trading plan. Broke from a good top at a fib and divergence, odds favorable momentum down through the mid-band with room to run. through the mid-band with room to run down to the other fib in my target strategy, 3 points on a 4 lot. Your plan would have had you put a limit order at 23, 25, shorting 4. I don't know what AOO is within the large trigger area of opportunity inside of the large triggers. Target would have been to buy 4 at 50, 20, 25, just above the divergence low, which would have been filled your 600 target profit. Areas of Oreo opportunity. I like it. So, Mike, you just weren't awake yet, right? You weren't in front of it? That's okay. Because what you did here is the greatest thing that you can do. Mike, you didn't take the trade. You didn't get paid on it. You didn't make any money on it. But what you did is you said, just because I'm not taking a live trade, there's still an opportunity, right? And you mentioned the termination that created the full reversal in your little rundown here. You mentioned the odds favorable momentum. You also mentioned that you had room to your target. And then you also mentioned an area at the triggers and that you would have gotten paid. So whether you know you were doing it or not, you are creating trust in this look. You're creating trust in a termination that creates a reversal. You're creating trust in momentum. You're creating trust in your entry. And what you're doing is you're proving to yourself that this is the look that's going to get you to where you want to be. So, guys, you don't have to be in a trade to get smarter. You've got to take pictures and annotate charts. And, Mike, I thank you for this one, because that is an outstanding read. And the results are everything that I thought they would be. And if you're wondering, oh no, I just closed it out. That's what it did after Mike's amazing read. And Mike, one day you'll learn how to pull it all the way down to the next fib. But until then, why not just get paid, right? Paul likes to get paid. Paul says, when everything is down and the momentum is the strongest, I'll sell a pullback and I'll get paid. Beautiful. So proud of you guys. And then Joel, polar bear in a blizzard. There it is. That's a good bottom. That's a termination. Creating the reversal. Amen, Joel. Great chart reads, man. Great chart reads. Paul, odds favorable. The path is clear. The entry is good. The stop's appropriate. So that's crude oil. Let's see if there's any market flow chartery that might have helped. I'm not sure, Paul, that there's much you could have done better on this one. Are you in here? When those small triggers are down so strong, I won't fight them. You're in at the right spot. Your stop is appropriate. This one just didn't work. I could say, dude, your mid-band was below. It gave you the reversal bar. You followed it with the stop. Divergence from well outside of the outer bands. I like everything about the trade, Paul. It just didn't work. Strong triggers for the win. And he's probably dropping the kids off at school right now. So didn't hear a word of that. So we'll repeat it later. Gino, let's see what you're doing, Gino. This one just didn't work. Same trade, right? Just didn't work. In and out on the same bar. That's interesting. All triggers on the 13-2, mid-band bouncing right off support, got stopped out immediately, attempted to reload this one. Gino, were you in the discussion? When areas fall beyond the correction point, and this is for everybody, and I'm not saying that this isn't a great trade. Man, that's a great look. It really is. But when my bounce points begin to fall beyond the trigger lines, when my bounce points are beyond, so if they're below the triggers for a long trade, or they're above the triggers for a short trade, the likelihood goes down. Because what it means is that price is correcting beyond the correction point. For you guys, I don't know how technically accurate that is, but for my little hamster wheel of a brain, the correction point is the triggers. That's why we go through that whole rigmarole of defining the triggers. And then we want the areas inside because we want it to be this little harmonious coming together. But Gino, I like the trade. Paul, I like the trade. I'm glad you didn't reload. I can't figure out why you got out at 88. You got in at 92 at the perfect spot, and then you were out on the same bar before it did anything. And I'm not calling you a coward, but that's fear, right? You didn't have any reason to get out of that trade. If you were convicted to get into it, Cav, if you go to the YouTube channel, there's about 700 of them. If you're not where you want to be just yet, maybe not. Gino, any ideas why you exited so quickly? Did you rethink the trade? Because you said you were tempted to reload. Okay. You just figured 4 ticks is appropriate, so you got in at the top and it took you out 4 ticks beyond the window? Brilliant. It's rare that it happens on the same bar. It really is. It's rare that it happens on the same bar. So I am going to retract that it looks like fear, and I'm going to say, you know what? That was pragmatic, and that was my bad for reading it incorrectly. I love it. If you're going to take it, there's no reason to give it all back, right? That's the area where it's supposed to work. That's the area where it's probably no longer going to work. And then if you're thinking about reloading, that's where letting the small triggers roll to look for another opportunity. It keeps you a little safer. And Cav, market flow. Boy, oh boy. We'll go through it just a little bit, but not yet, because that's a whole lesson itself. Let me give these guys that posted first a little seat time. Pedro, same one, right? Does large chart pullback kill the momentum criteria? Everything is strong. Wouldn't you agree, Pedro? And guys, this is a great trade that didn't work. I mean, that is everything up and nothing in the way and strong triggers and nothing there. And man, and it gave you great stop placement, right? Pedro, it gave you a reversal bar to go from 77 to 85, right? So 6 ticks, not 14 ticks. Does that make sense? That's the only thing I can say about this, is your stop's a little ridiculous. You are so far on the wrong side of everything. Don't give that much up, Pedro. You're too good at this. You're too good at understanding where it can continue. You're too good at recognizing reversal bars. You're too good at knowing that if this doesn't get it doing what this says it's going to do, it's all right. It's okay to be willing to cut. No, why? All right, we're going to, hold on. So Pedro, let's do this. This is management, guys. Management's the hard part. Getting in's easy, right? You guys everybody can get in. So Pedro, where's the market most likely to continue? Right here, right? Right where you got in. Your beautiful, perfect, unbelievable. I could teach a class on an entry, right? Are you cool with that? That's where the market's likely to continue. That's why you got in there. So if price comes here, would you enter the market? Or do your rules say this is where it should continue? And I'm trying to go through this a little bit because I want to try and talk it out. If price came all the way back here to the wrong side of the triggers, below the fibs, would you be interested in taking that trade? Or would you be like, oh, holy shit, things went bad. Pardon my French. Every now and then one slips out, guys. I apologize. And that's kind of the logic behind it. You could say it's probably not going to go behind that. That's $280 worth of risk. Compare that to losing $120 total. You lose $120, that's not so bad. You lose $280, that stings a little more, doesn't it? And you're less likely to take this next one. So being able to manage your risk is huge because you're so good at understanding where the market is likely to continue. And the cool thing is, Pedro, is if it comes down here and it starts to bounce up, these triggers are going to roll. Maybe it gives you another shot. But at least you didn't get run over and then drug all the way down to this place where you would never even dream of taking a trade. Does that make sense? So the only feedback I could give you on this one is once that reversal bar prints, brother, once it says, man, we're doing what we're doing, it's all right. It's okay to reduce that risk a little bit. I hope that makes sense. It's a great trade. Every one of you that took this trade, beautiful. Great job. You took the right trade. It just didn't work. And there's just no reason to keep giving that much away. Good stuff, though. I love it. And then, who was this? This was Ron. Ron says, with weak triggers and a termination and divergence prints, I'm going to see if we can't get a little shoved back to the reversal bar marker. Not a trend trade. Not with the direction, not with the momentum. Guys, it fights everything. But it is on the correct side of the most rapid. Ron, I love that trade. I would never take it. I love that trade. Paul, 50-50 trade. No divergence. I'm not sure what it did, but you sure did give up that clear path. I'd like to hear a little bit on why you took the trade. It's not a good bottom. There's tons of momentum. It has the potential to break. I guess it's a low-risk shot. What kept you in on a couple bars down? I'd like to dissect that one with you and hear your thoughts on it. I just don't have anything to work with. And then this one, can't see the large chart, but I see what is probably a 50-50 with divergence, getting in right at the top of the outer band, Paul. Nicely done. I don't even think he's in here anymore. Guys, once you're a chart reader, everything changes. Once you're a chart reader, everything changes. Not a good bottom. Joel, remember, we want it to come from the lines, right? Not the line that was created. We want price to reach it and go. It's divergence. There are probably, once it gets up here, kind of irrelevant because we've got odds favorable. Everything says up. Tiny little pullback. I'm not sure why you got in so late, but it looks nice. Good job. With momentum, direction, all that good stuff. Whoops. Oh, no worries. Oh, that's that little software arrow. Okay. Cool. All right, Cav, are you with me? Market flow will kick your butt initially. So I'm going to give you the best way to use it. And guys, this is for everybody that's interested in market flow. And you know what? I'm just going to do this real quick. I'm going to pull my market flow over. This is my NASDAQ market flow. And I'm going to get rid of darn near everything. I'm going to get rid of my Pro Trader. I'm going to get rid of my market flow. I'm going to get rid of my divergence potential. I'm going to get rid of my range bars. I'm going to get rid of my Pro Trader, and I'm just going to leave trigger lines. Why am I doing that, Cav? Because with market flow, you either have odds favorable momentum or you don't. You either have strength or you do not. Does that make sense? Market flow is the confirmation chart. So, you know that little momentum trade that you love? That little breakthrough, pull back, giddy up? Strength, one bar up, one bar down. Let's see if that was one of your trades. Not quite. If it happened right here, that's a good one. So market flow will confirm momentum first. So when you're looking for your momentum trades, Cav, when you're looking for that trade that makes you happy, that one where you use the momentum, the rules weren't met, obviously. So you wouldn't have taken it. But do you see how there's odds favorable momentum? This may help you in other ways. Guys, you don't need all of the bars. You don't need all of the dots. The new stuff doesn't even have the yellow reversal bar marker. So confirmation of momentum is the first one. I'm going to load this back up. There we go. That's the first thing, Cav. Confirmation of momentum. Another way you can use the market flow chart. See those green and pink lines, those HVA areas? Still have to respect support, right? But what happens, look at that termination condition. Market flow can help me see when the market is extremes, like an outer band. Market flow can help me see when those extremes have been overrun. Great opportunity to not take the next short. Market flow can help me identify these HVA lines, which is a trade that we teach. When a termination and the triggers roll, I look for this line to get me up to the next areas. But the way John Novak teaches it, one of the best ways, is when you have the strongest triggers possible, this little one down, one up, it's going to give you the opportunity to embrace momentum. It's going to give you the opportunity to take advantage of momentum. But if your rules aren't met, market flow chart won't save you. If your rules aren't met, market flow chart isn't a magic chart to give you what you need. So I'm going to go to the market flow section, and he needs to redo this whole thing because we're going a different direction, a way simpler direction. When the rules are true. So Cav, when your rules say it's time to look for an entry, you can use market flow to confirm the momentum. When your rules say that it's time to look for an entry, you can use these market flow HVA areas, these high volume areas, these pink and green lines to help confirm the area. You can also use them to take the first shot when you have a termination condition, when there's a good top or bottom through the HVA trade. But if all you do is stare at the market flow chart, and I'm going to tell you right now, I've been guilty of it myself. I have been guilty of trading the market flow chart before I traded the Renko chart. So you have to have the Renko chart trade before you ever look at the market flow chart. And there's a million videos on it. There's a million ways that you can do it. But if I don't have the rules met, it doesn't matter what it says. So I would tell everybody, use it as a confirmation of momentum, first and foremost. But even with all the momentum that it had, it's still a termination condition, right? There's no reason to take that trade. But do you see how up here, Cav, we're so far outside of the outer band? Up here, we've got weakening triggers, and we're beyond an extreme. What it does is it keeps you from hoping that that support holds. There's no opportunity until you at least get back to these outer bands, and then when it gets there, you're fighting the momentum. So it keeps you from hoping these areas are going to hold, right? It keeps you from trying to take that long. And it takes study. It really does. But Cav, if you spend a little bit of time over in Traders Chat, you're going to see a lot of posts in there. And I think that one of the easiest ways to do it, and let me see if I can find a cool example. And this is crude oil. And guys, I'm not saying trade into a termination condition, but I've got momentum and I've got strong triggers. And I want to show you what it looks like here on the market flow chart. I've got the strongest look ever, and it's using the outer band. So I have support, and then through my market flow chart, I have confirmed both strength and support. Does that make sense, Cav? So maybe you're thinking about taking this trade, but you're like, oh, this is a little scary. It's 50-50. I pretty much have kick-assery all the way across the board, and maybe it makes you a little bolder, gives you the opportunity to catch a couple more moves. And then one of my other favorite ones, and you'll see this, and John Novak teaches this, and I'm not going to teach it in the room because I don't have any idea how to teach it just yet. I'm still learning to use it, is when I have a termination condition, right? I have a pivot stop out and a couple divergences. Very often from these key areas, Cav, if it's really going to be a top, I'll see this breakout white bar right off of it. And I know not to fight that. I know not to hope for that last long trade into the termination. So, good stuff. You want to critique, Mike? I got you. Did you write rules on the chart for me? Got in because of odds favorable momentum. What a ridiculous reason to get in, right? BTOCL March entry 77.34. You know what I'd love to see though? I want to see this one too. And Mike, one thing that's happened today, brother, and this is for all you guys. Buy to open. What does that mean? Help me out. I'm not familiar with that term. Your turn to teach me. Oh, to open the trade. I got you. Cool. Guys, if you go up to the upper right-hand corner and type in CL0424, Mike, it'll roll your contract because today is the crude oil roll date. And when I went back and checked the volume on it, that April contract is already well ahead of the March. It'll be an easier market to trade. So at 822, you're saying that with odds favorable momentum and a pullback to support inside of favorable large triggers, after a mid-band holds and price clears and everything says up, you felt like this was a great opportunity to get up to Fibonacci resistance, Mike B? Can I get an amen and a hallelujah out of this one? It's everything, isn't it? Momentum for the win. You had strong triggers. You pinpointed your pullback. Your entry was at 77.34, which is maybe just a little bit early, right? Because there's your entry at 29. So rule number 3, Mike, and it's hard to read your chart a little bit because it's so squished. Rule number 3 just added $50 per contract, but what it also did is it saved you $50 worth of risk by using that line to trade from rather than jumping in at the top of the triggers. Does that make sense? Cool. And guys, that's why rule number 3 is such a big deal, in my opinion. Not that my opinions mean anything, but I'm going to show you why. I'm going to show you why. You know, it's funny because I had to teach this 1,000 times until I believed it myself. And management's hard, right? So you get the reversal bar and everybody's thinking, oh, I can't wait to take that long trade, right? I can't wait because I've got odds favorable momentum and everything says up and the path is clear. And it's prime for the pickings. And I think most of us have gone through this. And we're like, yes, 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 yes. And then right here, that little devil on your shoulder says, but Mark, what if they don't get to the area inside of favorable large triggers, right? But Mark, what if they only get here? And you're like, whoa, well, I got to get in up here, right? I got to get in before I get there because I don't want to miss it. I don't want to miss that money. And if it doesn't get your limit order and you see this bar, and right now everyone's going, oh man, that's me. That's totally me. Who's been waiting for an entry that didn't catch it? And they get in, stop it. And they get in right here when their small chart fluctuates. Anybody ever do that? You're like, it didn't quite hit my order, but now it's going up. I better jump in. So what did you do with that? And this is where patience and trust is huge, guys. What you've done is your stop is still down here, which means that it's huge. Your risk is huge. But what else did you do? You shortened the distance to the promised land. And guys, I see this so often. This is such a common entry. And the rules say wait for the area inside of favorable large triggers. So if you sit tight and you're in at the mid band, this is the risk that you just reduced, that box, right? And the cool thing is this number is also the profit that you added to the trade. So it does two things. Not only does it give you a better risk to reward ratio. Well, I just covered both of them, right? So Mike, beautiful. And then that little bit of patience reduces risk and maximizes profit potential. And thank you for posting the picture because that's what we have to see, right? We have to see that a couple times. We have to learn to trust that. We have to go back in our spreadsheets and go, what's Yuri's perfect short? Yuri's perfect short is all that momentum in a clear path and then a pullback to resistance. And see where he gets in on this trade. And I don't know what Yuri's doing anymore. But Yuri got in, you can see by his entry, right there. And his risk is virtually nothing when it starts going down. And it's kind of cool how you can do that. You're welcome, Mike. Thanks for posting, man. Telling you guys, there is an amazing lesson in everything that you guys post. Virtually no room to the target, but if you wait for the pullback, there's nothing but money to get there. And I think what happens a lot, guys, is if you go through and you start clicking on these, right? I'll go down here. Adriana's perfect long. When everything is strong and going up, she gets in at the mid-band. And she's looking for that next target with all the momentum. And guys, tell me, if you're up $675, can you think of any reason to still have $300 risk on a trade? I hope not. Because look at her entry and look at where the bottom of that pivot is. Her stop could be virtually nothing. Virtually nothing from that simple pragmatic management plan. So, guys, keep them coming. Keep those pictures coming. But go back and take a look at these, right? This one's even in Spanish. Where did it go? I just read Spanish somewhere. We had José's más mejor. Which means that when everything is screaming, buy the pullback and get paid. So, anyway, But I digress. We're at the tail end of momentum, right? It's almost a clear path. And now we're waiting to see if it pulls back. And you have to make the decision if your rules are met or not. Not the best momentum, not a clear path, two divergences. Does anyone see the train wreck happening here? Triggers didn't clear. Triggers aren't odds favorable. Two losses of momentum. That's a tough look. It might go down, but that's a tough win. That's a tough one. Came off of support. Nobody went short. Gap theory brings it back. And now we're at that termination with every trigger line pointing up. Some people say I'm going to let it clear. Some people say I'll take a shot. Because when a bad top pushes me to support and the large triggers don't blink, 77.75 is not an unreasonable goal. Kind of cool, right? All right, guys. We've talked about all the pictures. We've talked about the plans. I'm going to take 2 minutes, and then I'm going to come back, and then we're going to finish. And guys, if you don't post, if you don't ask, I'm going to start sharing everything that I own in my files. So I'll be back in just a moment. Almost done. All right, guys, home stretch. Here we go. Satellite radio. One more time. Have a plan, guys. Have a plan. Have a clear entry. Have a clear exit. Have a plan for both. Hope is a horrible thing when you're a trader, and let me show you what I mean. If you took this long, getting out at 44 seems like a great idea if the market turns at 44. But what happens, yeah, can you guys hear me? Give me a Y if you can hear me. I'm going to show you, let's talk just a little bit about it, right? And I'm going to use this as an example because I think this is a great example. And I think that this is something that happens to a lot of us, especially as we begin to trade. You take your entry, right? And you feel good about it. And then you've got this big red line here. And if your entry is at 27, and I'm going to use shapes. My entry's here at 27, and this is crude oil. Maybe my $100 target is here at 37, right? And this is where I take $100. And that's what my plan says. My plan says 100, 200. And this is the beginning. So in the beginning, that's it. That's my only option. 100, 200. And then I start to become a chart reader. And I say to myself, well, at 44, I have weak triggers and resistance. But 44 is only $170 away, right? And my $200 target is up here. So the next step in management, guys, and the thing that's really going to take you next level and have you capitalizing on advantages is being willing to say, I'm okay taking 270 instead of 300. I'm okay moving my second target to where the market is likely to go rather than hoping with weak triggers it breaks everything in front of me. Does that make sense? And I see this a lot. And then what happens is your target is here, and maybe your stop's at break even, and off of that key Fibonacci area, the market falls, and it falls fast. And your $100 is reduced after commissions and maybe slippage to $60 for your efforts. When you have these amazing lines that help you out. So it's hard to say it makes sense to take it off here. It's even harder to say it if it would have hit your target. And that's where you have to go through and you have to study. How many times did it hit my target? How many times does it make it? If I'm short, and I'm not saying that there was a short trade, doesn't it make sense to exit at support with all the triggers up instead of hoping that it gets to the mid-band? And I see this a lot with people. I see people hoping that the market gives them what they want rather than what the market is willing to give. And it happens a lot. Resistance with weak triggers. It's better to get paid than suffer the retracement. Support with no triggers. It's better to get paid than suffer the retracement. Our goal is to get paid. And if you're using something like Apex, right? If you're using something like Top Step or whatever, where they have these trailing thresholds for your stop loss, if you go up or you're trading, let's say you're trading long, right? You've lost momentum, you've got divergences, nothing is working out, and it goes up $100 and it goes up $150, and then your stop is way down here and you lose 300 on the trade. You didn't just lose 300, your trailing threshold just decreased by 450. So if you are using one of those prop firms, guys, getting paid is hugely important. Recognizing trouble is hugely important. Not trading into trouble becomes hugely important, because the reality is that they want you to prove that you can make good decisions. They want you to prove that when the market says it's done, right? Crazy weak triggers at areas not broken, that you're not getting in here and putting your stop behind the mid-band hoping that everything works out. Does that make sense? I hope so. That's a great management lesson. It's okay to move your stops, guys. It's okay to not hold for the predetermined stop, the same way it's okay to move your stop to where the market shouldn't go. And I see a lot of people give a lot of money back into key areas. So that's one of your management things, guys. You got to manage your risk before you manage your profits. And there's my segue. That's how you know you're becoming a mature trader. When you manage your risk, then you manage your reward. You manage the problems. And we do this at Nexgen. Well, you do this through Nexgen when you insist on momentum, a clear path, and entry, guys. Because what does that do? Momentum means it's more likely to push in the direction of your trade. Clear path means it's more likely to continue in that direction momentum is carrying it. In that entry area, we saw the great lesson on Mike's chart. You can reduce your risk dramatically by waiting for the pullback, by getting in at the correct spot. So your great entries are managing your risk, right? Your ability to recognize where the market is likely to go helps you manage your risk. Your understanding that termination conditions can reverse the market manages your risk. And then once you get those reps in, and I'm going to tell you right now, who's still nervous when they trade? Should be most of the classroom. Who still gets sweaty palms and butterflies and their heart rate goes up? Absolutely, right? So guys, being relaxed comes from repetition. Being relaxed comes from seeing it so many times that you believe in it 100%. Being relaxed comes from being knowing that you have every advantage. And we tend to get a little less relaxed when we hyper-focus on the chart. So if I'm looking at a chart and for some reason I'm in a long trade, every tick is a stressor. Well, I sold it. Every time this goes up, every time this goes down, it stresses me out. I'm break even. This is wonderful. Do something, S&P. Oh, I'm winning. This is great. Look at me go. I'm amazing. Oh, crap. Now it's going against me. Shoot. I don't want to lose. Let me move my stop. Oh, it might not make it because that's a mid-band. Let me take profits. Oh, and I just got stopped out. And my emotions just turned me into this little monster that's moving things all over the place. So you find yourself relaxed when you begin to trust it. When you're like, man, the large chart said down, and the large chart had a clear path, and the large chart said that this market's likely to go to this point, right? I'm looking to see if we can find, S&P's been kind of ugly. That it was wonderful, just like you. That it was nothing but momentum, and momentum leads the way, and the great top was outstanding, and your entry was absolute bliss, and your trust in momentum carried you to larger profits. Debbie, I didn't do anything but sing your praises. I actually bought a billboard. You'll see it on 75. The Debbie W knows how to trade billboard. It's outstanding. It's everything that we look for in a trade. It's everything that we look for in a trade. It's momentum. It's room to targets. It's smart entries. I love what you did there. So guys, the more trust that you build, patience is hard for everybody, Debbie. The more trust that you build, the more times you see a market push with momentum, the more times you see it bounce from an area inside of favorable large triggers, the more times you see it reverse at a termination condition, the more you say to yourself, this is what I recognize, right? I've seen this. I know this. I'm comfortable with this. I've seen this gap theory 1,000 times. I know that when price gets down here and these don't fall, I don't have to take the short. But here's the deal. Who's taken the short? And I'll put my hand up. I've taken the short, even though I knew that the gap theory was in effect. And I'll tell you right now, guys, you spend the 3 minutes until you're stopped out in a very panicked, nervous state because you know that you broke your rules. So adherence to rules and understanding the rules and trust in rules, that's what's going to get you there. Not forcing or chasing trades. Not trying to impose your will on the market, guys. Simply saying my rules are met, I'm in the trade. My rules are not met, I'm out of the trade. Don't let it be your adrenaline fix. If you have to trade 100 contracts to be satisfied, you're probably doing yourself a disservice. If you have to be aggressive and go counter trend, you're probably doing yourself a disservice, guys. Nobody ever said, I'm going to be an accountant because the adrenaline rush is amazing. I'm going to go be a school teacher. Well, the adrenaline rush might be amazing for that, right? Go jump out of a plane or swim with sharks, guys. Let trading be your business. And when you follow a plan, is there anyone else in this room? Guys, do you know when I lose? I lose when I don't follow my plan. When I do follow my plan, I find myself with strings of weeks of winners. And one bad day of not following your plan can ruin your life, or at least your account. And then this one, your worth as a trader and your worth as a person are two separate things. Guys, you're all wonderful human beings. If you have a bad day, it doesn't change that. If you have a good day and you're an asshole, you're still an asshole. You're just one with more money, right? Trading has absolutely no bearing on your personality, has no bearing on your worth as a human being. If you kick puppies, I don't care how much money you make, you're not okay in my book. So, all right, so that's signs you know you are maturing as a trader. Isn't that ugly? I thought it would go, but then it didn't go, and then it's still not going. Oh, wait, it went. Man, I got to start taking all these trades because what if that happens next? It's a big thing. It's a big thing. Let's see. Let's go back to the classroom. One of my favorite phrases ever. Let's highlight it. When you stop expecting to win every trade, you're going to start winning most of your trades, right? The fear of loss makes us make poor choices. And when you don't care about the result, you only care about the execution, it becomes easier. And what is the execution? And guys, I'm just beating a dead horse. I'm trying to fill space, time here because nobody's posting pictures or asking questions. The execution means that your advantages were in place. And when your advantages are in place, you've got a better chance of winning than losing. And that takes the stress out. So focus more about your advantages being in place than the money you want to make or the car you want to buy or the girl you want to impress, right? And when you believe you know what's going to happen, you set yourself up for failure, guys. So when you take a loss, that loss means that you were sure it was going to win. You should never be sure it's going to win. You never know if it's going to win. That's why we trade around advantages. And when you don't care what happens, the trade doesn't matter. It's a collection of 20 or 25 trades. Hey, Cap, take care, man. It's not one trade at a time. All there are is ticks up and down. You create your own emotional pain. Some of you need to let that resonate. You create your own emotional pain. The market doesn't give it to you. So the four fears are being wrong, took the wrong trade, losing, it happens, missing out, oh no, I didn't get paid, or leaving money on the table. And if you focus on your fears, you're going to cause them to happen. It's that whole, what was that book that everybody was into 20 years ago? The Secret. You put it out in the universe. So anyway. We'll save that. What else? Did anyone else get surprised that absolutely no triggers through a divergence high? Absolutely no areas inside of favorable large triggers? Is anybody just shocked and awestruck? Miss Debbie, have a great afternoon. That market pushed lower, that there was a reaction right at a key area that messed up your good time? Gold by 10:30, training for beach weather. I like it. Man, Ron, it's always great having you here. Sorry I referenced you so many times. I hope that's not weird. But you've gone through the path, man, and I appreciate that you still show up and you're a part of the class. It's good for the kids to see where they're going. Termination creates a reversal. That's an old one. Bad bottom. Right into a mid-band. I wonder what's going to happen. I don't have any idea. Don't have any idea. Guys, do we need to shut it down? Should we talk about the experience curve? Do I have anybody new in here? I just want to make sure. Guys, you're going to start out, it's going to look like fun. And then it's going to be hard. And then you're going to be confused. And then you're going to think you're a rock star. Are we getting SpaceX in Texas? I thought it was already in southern Texas, down by Brownsville. Is it not? I thought SpaceX was down in South Texas. I want the Starlink. I want his crazy internet so that I can go do this anywhere. I want to go sit at the top of the mountain with Starlink and make money. Like a rich little Buddha. And then you don't know where you're at, and then you just have to do it, guys. Tighten up your plan. Trade what your charts say, not what you want to have happen. Is it? You have it, Joel? Weak triggers, divergences, creating problems. All the triggers above support, it holds. Mike Lynch, how'd your day turn out today? Lyle, how'd your day turn out today? Joel says that he has Starlink and he loves it. Yeah, he does. Branson definitely knows how to have fun with his money. Good bottom on the 13-2. You're just waiting for some rules, right? Just let those triggers roll. Make life easy. I love it. Up 400. Nice job, Mike. Nice job. 400 is great, isn't it? Could you imagine being done at 11:30 East Coast? That's all you do every day, and you make $8,000 a month doing it. $96,000 a year for $400 a day. That's what people don't get, guys. If the best you do is $100 a day per contract, and you're only trading one contract, what is that? That's $500 a week, $2K for the month. That's 24 grand. If the best trade you can pull off is $100 once a day, that's a $24,000 a year. 24,000. And what if you turn that one lot into a 10 lot? Isn't it suddenly $250,000? And then you turn that 10 lot into a 20 lot, and suddenly that $100 is $500,000. Doesn't it make sense to learn how to get paid? That it doesn't have to be a home run? That time works everything out? It is $1 million opportunity, Mike, but you got to earn it. So $500 a day, guys, a 2 lot. $500 a day is $125,000. I'm just going to make it easy numbers. I want you to think about this. If you can make $500 a day and you're looking at your market and that's it, and it's $500 a day, and I wish Cav were in here because he would help support this. Guys, through things like Apex, you can have up to 20 mirrored accounts, which means that $5,000 a day on 20, or $500 a day on 20 accounts is, what is that, $5,000 a day? No, that's $10,000 a day. And that's $50,000 a week, right? And that's $200,000 a month on $250 per contract on a mirrored account. Has anyone ever just thought about the staggering potential for being consistent? And being consistent on a small basis? What if the best you did was $100 a day and you only had 10 mirrored accounts and you made $1,000 a day? $1,000 a day, guys. You made $20,000 a month on $100 a day with 10 mirrored accounts. I'm telling you, the idea isn't to find all the trades. The idea is to find the best trades and capitalize and get paid and get the money safely into the account where they can't take it from you. My 2 cents, I'm not telling you how to trade. But guys, everybody that I talk to that says when they're trying to catch all the trades, they blow out. When they try to catch the best trades, suddenly life works out for them. It's amazing. And then I'll share this with you guys too. I know that I've shared it before. Emotion-free trading. Have you guys all read this? Mike Lynch, you'll love this one. I think everybody will. Emotion-free trading, guys, and here it is right there. Acting in your best interest. Are you doing what's best for your trading, right? Are you taking the trades with the most advantages? I love that phrase, acting in your best interest, because when I break my rules, I'm not. But there's a lot of different things in here, and I want you to see it. Skills you do need. Setting and accomplishing realistic goals. Your goals must be realistic. They must be attainable. They must be measurable. What is my goal? If you say you want to make $10,000 a day and you're brand new, that's not realistic. But $500 a day is certainly attainable, right? Learning to love to take a loss. This is a huge one. Your losing trades do not diminish you as a person. You are not your losing trades. You are also not your winning trades. They're simply byproducts of the business that you're in. That's all it is. Time has no bearing on money. This is emotion-free trading. Rob, I just dropped a PDF link in the room. I'll do it one more time. My brother made me read this, and then I read it 3 more times after. I've got it downloaded on my iPad, and I go back and revisit it a lot. And it's kind of funny because this covers something that's kind of weird. Remaining flexible. But I think this is a big one. If you're one of the people, and guys, I didn't grow up with money. John and I did not grow up with any sort of money. We were pretend Levi's and Kmart shoes and pennies from the couch to try to buy lunch kind of family. And a lot of people just don't understand how that you can make money, but they're not used to it. And you've got to work through that emotional thing. Do I deserve to make the money, or am I sabotaging myself? Self-image has a hold on you, right? Your subconscious. There's so many great things. And then it goes back to rules. Beans and potatoes, we did it. One big pot, right? And then guys, there's that phrase again, flawless execution. That's what we work on every day in here, is we work on flawless execution. We work on advantages and entries. We work on the best of the best, and then getting in when the best of the best has happened. When I have momentum and a clear path, without hesitation, I put a limit order right here, and I don't care what happens next. Do you guys see how quickly that read just happened? Take a second and look at my charts. Am I right or am I wrong? Do I have momentum? Do I have a clear path? Do I have an area inside of favorable large triggers? Is the market obligated to come back to me? No. But isn't that it? Isn't that everything that I look for in a trade? Then some of you say, that's my highest point. So the rules didn't change, the look didn't change. The only thing that changes is the market went up, my triggers moved, and so did the areas inside of favorable large triggers. So now I'm hoping and praying for a little snapback just above those one-to-ones. And when I do this, guys, you hear me, and I'm very calm about it, right? I don't really talk about my fears or my worries. I simply say, this is what it is. This is where my rules are met. And then, Pedro, if for some reason 84 doesn't hold, is it okay to put a stop where the market shouldn't go? It shouldn't drop below these one-to-ones if this thing's going to bounce and run, right? Because if it does, it may go to 75. It may come all the way down to here, which is okay. But I'm not going to lose money all the way down to 75. Hell, I'm going to look for a second entry. Does that make sense, everybody? I'd rather lose $100 than $250 if things go south. Let's see if it gets it. We'll blow it up for you guys. Still have momentum. Still nothing in the way. Just for grins, 78.05 is a fib. Big set of them over at 78.20. Just hoping. It doesn't have to be hard, does it? Who saw that it didn't get there and jumped in? Oh, look at these fluctuations jacking with you. I'm going up. Nope, I'm going down. Nope, I'm going up. Nope, I'm going down. Oh, I don't know. This is terrifying. Who lives like this? Guys, there's no control. It either is or it isn't. It either does or it doesn't. Right? It either will or it won't. But are my rules met? Do I have a statistical advantage? Have you guys seen the fluctuations from 95 to 87 to 95 to 87, back and forth, back and forth, back and forth? Those fluctuations will kill a trader. Didn't get me. Man. You're in at 87? All right. 3 ticks above the area of support. Because with that look, Joel says, I'm not going to miss it. I'm willing to pay for the entry. My brother used to say that and I didn't understand it. He goes, sometimes I'll pay a little extra if I like the look. Sometimes I'll get in 3 or 4 ticks above the area of support because I like the look. We'll see what happens. I never root against you guys, but I sure hope it comes back to an area inside of favorable large triggers. Well, that's ridiculous, isn't it, Joel? Because 83 is 1 tick below support inside of favorable large triggers. Does that make sense? Doesn't it have to be 4 or 5 ticks below where the market is most likely to continue? I mean, you can do whatever you want, but 83 sure feels emotional. 83 puts me right at my entry point. You do whatever you want, right? My rules are still met. Let's see if we get that fight. Let's see if the small crowd could do it. I never even got a reversal bar, guys. Never even got a reversal bar to define my window of opportunity. Small crowd hasn't done anything yet. They've tried. That was 1 bar's worth of fluctuation. But this is what trading is. I'm powerless. I don't know. It either will or it won't. And I don't know what it's going to do. There's odds favorable. It's a bad bottom. Everything is up. The momentum looks outstanding once again. That's my window. Should it decide to come back? Weak triggers. Oh, I can't take that trade. My rules aren't met. Why are you wrong, Joel? You took a long trade with all the advantages, right? You knew where the market's likely to continue, so all you have to do is ask yourself, where shouldn't it go? That's all it is. All right, small crowds doing their thing. Are they going to make it back? Should we give it 2 ticks? Pretty outstanding, isn't it? It's not odds favorable, but I still have momentum. Ah, did you see it just sitting on there? I'm filled. Where shouldn't it go? Probably somewhere around there. In at 86, so $100 is 96, $200 is 06, but isn't that on the wrong side of a fib? You know what, guys? I'm going to sacrifice 20 bucks, and I'm going to put my target on this side of the fib instead of the other side of the fib. What do you think, guys? So far, so good? So what's my next step in the KISS plan? If I get a reversal bar, then I'll reduce my risk. But right now, I'm 4 ticks below where the market is likely to continue. There's my reversal bar. My risk is now $30. My first target is at $100. Man, I'm so close. I wonder if it'll get there. I don't know. I can't control that. I'm telling you, having rules makes such a difference, Rob. And it really does. And guys, I mean, it is what it is, right? We could talk about anything right now. It's either going to hit 96 or it's going to come get me at 83. I don't have any control over that. I don't get a vote. But do you see how by not jumping in, I was able to reduce my risk? By not jumping in, I was able to increase my profit potential. By not jumping in, I know without hesitation that my entry is pragmatic, that my stop placement is pragmatic, that it follows a very specific plan that has been proven to win more than it loses. Oh, and here it comes. Man, I should probably jump out, huh? What do you guys think? Jump ship because of the fluctuations on the small chart? Oh, now I'm break even. Dang it. Now I'm down money. Oh, nope, I'm up money. It's good. Hold on. Hold on. It's an emotional roller coaster, isn't it? Guys, I don't care. I'm either going to win or lose. Doesn't matter to me. Doesn't do me any good to adjust stops. Doesn't do me any good to adjust targets. Doesn't do me any good to panic, to worry, to wish, to hope. My rules were met. My entry is solid. My stop makes sense. And it's 100% out of my hands, guys. I'm going to go get a cheeseburger and a taco, maybe a milkshake. And when I come back, I'll see what happened. The only thing that'll take me out of this trade is 3 divergences, and I don't even have 1 yet. Is everybody with me so far? Did you see how you went from being up 160 to down 20? And now you're up 140, and now you're back at 100. And oh, there's 120. And guys, this is an emotional roller coaster. What the hell am I supposed to do? Should I move my stops? Should I preserve equity? If I did that, I'm out of the trade. Guys, this one might lose. The reality is that I'm doing it live in class. It's more likely to lose than win, I think, because that's Murphy's Law. But it doesn't change my emotion. It doesn't change the way I read it. It doesn't change the rules. It doesn't change the stop placement. It doesn't change anything at all. Is anyone else nervous? Got some nail biters in the room? If you get nothing out of this lesson except for the market pulled right back to where it was supposed to continue and that's where it bounced, I think you should be impressed. How did I know? All the way back here. How did I know that that's where the market should bounce? Because of repetition. Because of recognition. Because of patterns that repeat themselves. And guys, it's such an emotional roller coaster, isn't it? It's hard to watch a market go up and down on one bar, and you don't know if it's going to win and you don't know if it's going to lose. But I feel pretty darn good about it. And for 40 bucks, 30 bucks a contract, to make all that, that's a pretty good risk to reward. Rob, what do you think, man? Did that help a little bit, seeing it live? Guys, does it help a little bit to see it, to talk through it? Has anyone in this room ever sat here and talked to themselves like that? Well, I had the momentum, and I picked the area, and the entry is good. Why on earth am I thinking about moving my stops? Why am I letting fear run my trading program? Is anyone else in the trade? Congratulations, you just made $100 on your trade. If you want to go break even, go break even. You got nothing to lose. I hope not. And what's there to do now, guys? If I'm a brand new user, there's not a darn thing for me to do. I got to see if momentum carries me to the area. Whew. Man, I'm so glad you guys didn't jump ship when you were negative 20 bucks on that trade. What if it comes back and gets me break even? What do you think, guys? Yeah, I'm on crude oil. I'm on the April contract, Rob. That's where the momentum is. So if you need to, if you're not on the April contract, guys, go type CL0424 in the upper left-hand corners. Yeah, I'm still up $100, right? Maybe you're like, oh, I'll pay for commissions. I'm break even +1. Some people do that. Some people say, I'm up all this money. I'll get out with a reversal bar and I'll look for a re-entry. Some people say, you know what? If it comes back to these 1-to-1s, I still like the trade. I'll keep $4 on it. Which management is right? All of them. Just make sure that it's yours. Make sure that it's your management. This is fun. I like it. Having a good time. So guys, which direction is the large chart going? This is how I want you talking to yourself. Is the market up or down? It's up. Are the triggers up or down? They're up. Do I have anything that even remotely suggests down on this chart? Anywhere? Nothing. At all. So why not see what happens? We'll go break even because that's what the KISS plan says. But you'll develop a new strategy. Guys, I can't think of any reason to get out of this trade. I can't think of any reason to let fear dictate my next move. And I don't know what's going to happen. I never know what's going to happen. But you know what? If you say that to yourself mid-trade, I don't know what's going to happen, but here's my advantages. I don't know what's going to happen, but there's my great entry. I don't know what's going to happen, but I have no risk on the trade. I don't know what's going to happen, but everything is green. I don't know what's going to happen, but I have a clear path. Keep going back to advantages. Don't care. My risk is zero. Come get me. But you're going to have to come get me. I'm sure as hell not going to put this right here because I don't want to give back any money. Watch, there's cameras. They're about to grab it. Oh, let me move it again. Or maybe you do it. Maybe you just say, you know what? To hell with it. I'm just going to close out. There we go. I closed out. Because my emotions got the best of me. Oh no! Now it's going up. I was hoping that would happen. I hope it smashes into that fib. Because I got scared and I tried to keep my money. But I didn't have any reason to do it. Does that make sense, guys? This is simulator. I don't mind getting out early. Who cares? There's a lesson. But this is what you're doing. So guys, that's my day. That's what we do. I've got one at 05. You see the big red line? This is what we do every day, ladies and gentlemen, is we talk about advantages and we talk about whether it's the right trade or not. And we try to circumvent emotion, exit at 94, with indicators. And there it goes. And now you've got regret. Damn it, it hit the target, guys. But now I have regret. Can we get like a hallelujah? We picked off exactly where the market was likely to continue. We took our predetermined profits, and then emotion just cost us $100. Emotion cost me $100, not my indicators, not the market, not my rules. Emotion cut my profits in half. And guys, what a great way to end the day is for you to get that trust, for you